Well, I'm pretty irritated already this morning. Pretty upset. This is just ridiculous. So silly. Starting to look like a hook. That's what it looks like. Man. Oh boy. What a mess, huh? November 5th, 2020. I mean, are you referring to like fractal stuff? Yeah. Maybe. I'm not going to say no, but I'm also not going to say yes. So the problem with the fractal stuff is that it's... all right, so let's not be like overly critical of it. I think there's times where that kind of fractal comparison can be beneficial. Yeah, I would agree that this is more likely what we're experiencing right now. So I don't think you're wrong. Like, this to me looks more accurate than anything else. It's like we've had this major sell down. We've come to near where the gap fill is. We're going to probably pump back up to retest those levels that we left behind. I would agree with that. Yeah. It's if you're looking for like a general comparison, that's probably the best one. The reason that I keep things kind of open-minded about it when we're looking at stuff like this is because it's the most similar region because it did finally mark out of this upper range and went for the gap. We thought, and I should say, I shouldn't say we, because I mean, whenever we're going the way we think we're going to go, I try to include all of us, but when we're like going a way that we didn't imagine, I usually just say it's me because I think it's important to own the mistake or the error perhaps on my part. I had imagined that would have happened a lot earlier, right? So there's a sense in which like this is the most similar because it finally marked down after an up thrust. I mean, it was a weird finale here for sure. Very late, and it finally marked down. And marking down sounds really bad, and it can be depending on what's going on. But it's important to note that in this case, when AMC finally did mark down, we're really talking about marking down beneath 4, and that 415 area is pretty pivotal. I mean, that's ultimately, regardless of personal opinion about it, I really think that at the end of the day, like I thought 460 was a better support. I mean, I still think it acted as support more often, even 440, 450, if you just want to say that. It obviously had acted as support for a lot longer of a period of time. But going back to what happened back here around 4 to 415, this is really where that floor was, and that was very rarely hit until here, and then it finally kind of like marked up. And then beyond that, you would even say like really the top of the range was like 515, 520. So we were really kind of, I don't want to say we were off, but like the range itself is not that big. It's really from about 515 down to maybe 415, and that doesn't look like it at first because you're like, well, we spent more time in the top. We were way up here. That's where my error was that, well, we're spending so much time in the top. We're kind of buying off the bottom, but the volume wasn't really in favor of that in the end. I didn't really think it was in favor of bears either, which is probably true in the grand scheme of things, because in the grand scheme of things, one of the things that was more difficult in this range was that for being a distribution that was going to eventually kind of come down, it has very low volume, and distribution usually has high volatility, which we have, but like the volume stayed very average, and then it went really low by the end. So it's kind of a strange, maybe a strange dilemma here. I think you probably have a lot more shorts, that bigger positions that just aren't reported than what we know, obviously. And then those guys were probably not happy with what happened back here. There was a large amount of buy-in last year, probably because of ETFs and stuff. And they're dragging that price down to try to get back to those levels that we saw earlier, which makes sense because it was a liquidity thing. But the range itself is very bizarre to me. So I think for the most part, if I were to pick out like one thing, it would be that range misinterpretation on my part and like where that really is. And I don't think it's necessarily like, I mean, that's a huge thing to get wrong, right? But if I got it really wrong, and I don't necessarily think it's like that simple, because obviously there's layers here to where those ranges are. So anywho, when we talk about a markdown, we're talking about really what happened here, and this is like a early sign of weakness, perhaps right in the beginning, when it hit 430 and it couldn't hold that and went low. And I guess that was saying, oh, we want to go down to the fours, right? So we're going to take it up, and then there's selling. I still think it's a mixed bag. I think there's a lot of confusion in this area. And then you come down, and it finally was able to mark down, and it pushes below even that. So it pushed below that like 413. We saw 415 hit repeatedly. Like somebody wants to go down there, right? And you drive the price down. You don't allow it to break. You don't put the money in to break it out, basically. And then this just reads as like a weird upthrust, and it's strange, but it basically took it back to the top of the range, which was 510. This is where things get weird because it jumped the creek and it advances all the way back above the top. I mean, it's a very strange move for just what could have just been a simple LSPY, and you would have expected, I would have personally expected, if it was an LSPY to stop at 470. And I think when Stockfather was talking about it, this probably was his expectation too. Like it wasn't going to just change right here, and it did. And I don't know if that's because of the dilution or what have you, but that's what happened. So after that, you can see like the next action is just to take it right down through the bottom, and there's really no stopping it at that point. And I had said, the only thing that you could see here as a positive would be like a spring, and it'd have to basically make a new high after hitting like 390s. It'd have to come back up above 440s and then come back down. It didn't happen. So you're just kind of left like, all right, that's that. You're going to head low. And sure enough, we did. Now, this first reaction here, I think a lot of folks were thinking that was going to be like it. That was going to be a big reaction. I didn't necessarily think it was going to fill the gap. And I had questions that people had asked, like, do you think it's going to have to fill or whatever? Not on the first run. Like, it could. It could still fill it. But it doesn't have to. The gap's not done yet. I mean, a lot of people are going to look at that and say, oh, it's filled. Well, the closing value on that markup day was 292 or 291. It didn't hit 291. So is it, from a liquidity standpoint, low enough, coming down to like $3? Yeah, I think so. But did it actually fill a gap? Nah, not in the way that you would traditionally say the gap is filled. Because during regular trading hours, it didn't touch those numbers. It just jumped up above. And it only came back down to 316, which right now we're having some trouble getting over. So I do agree that if you were going to make a comparison, that this markdown, so to speak, is best described as like that November area in 2020. If you were going to make a comparison, what's critical to understand is that this is also a markdown. I think that when you look back at it, it's a little bit maybe confusing because there's two ranges at play, and that's kind of the big thing here, right? Is like there's a range up top, which is really just the higher wave. It's a distributive range, right, in the midst of the grand scheme of things. What this is a distributive area that ultimately becomes accumulative at the end, like you buy off of it, right? You can see it. It's visually like really easy to see how that changed from sell, 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 sell to buy, and that's easy enough, right? And then the bottom area really was just exclusively buying. There wasn't any kind of distribution here really at all. So the sell downs that do happen are in the upper part of that range. So it's like microcosms, right? Like you have ranges within ranges. So like the biggest possible range here, would be really at this point, now we're looking back on it, is like 43 down to 10. But this was an upper range, this was a lower range, this is a lower range. So these would be considered like separate areas of trading within the larger range. And that makes sense, right? Of course it would. Because for every like macro wave that you have, like a bigger wave, you're going to have little waves on the tops and bottoms. So when I say markdown, I think folks are going to imagine immediately like, well, that means we're going to come below this floor. And this is what Stockfather said apparently. We're going to come below 230 and go down to like ones down here. And that would be a markdown, like of the larger range. But I think that the larger range is still there, and I don't think that it's marked down. So I don't know if maybe the reason that he's thinking that is because of how high this came, and it did penetrate above the top, like really far. I'm not sure if that's where he's coming from with that, saying that like he thinks he's going to flush below. He's not completely wrong. There's a possibility of like an S-curve here that drops low. I had said 226. I still think 226 is there. But within this structure, you have a multitude of ranges. So if we were going to keep it simple, and we can do that. Really? You can do that, Booksy? Yeah. If we were going to keep it simple, we would suggest that the range itself, the most common range anyways, which we see is like basically like 520 down to the bottom here at probably where we are, like 3. That's a little bit odd because I think that you'd have to suggest that the range really is this other floor, like what was it, like 291, 292. Like if that's the actual strongest potential range here, I suppose. And that the rest of this is just distribution. So this is kind of beyond the range. This is beyond the range. And then this is below the range, which makes sense. Because, I mean, that was a spring action, right? So I suppose if you're looking at it that way, the natural course of action would seem to be like we went up really high above, maybe we go down really low below. And that's kind of where probably the fear of like all of that selling that happened could have also been opening like a boatload of short positions to try to drive the price down to like 120 something, or whatever. I get that. I get it. But I think there's also the nature of like continuity in what we see in the grand scheme of things is that if you look back at, for example, like a 2020, that initial drop may be sufficient in some ways. And I don't know, man. This is a mixed bag of all kinds of things. There's a lot that we could talk about here. We could talk about waveforms, and we could talk about whether or not it's going to drop down to this low area at $1. you know, I hate to be like right about that because that was something that I kind of joked about, and I said I didn't think it was going to actually happen. Um, but this idea of like we're gonna continually try to like push down towards that $1 mark seems impossible, right? For so many people for so long. But certainly, if I were looking at this in a vacuum by itself and I didn't have any kind of idea of like what's possible here, yeah, I mean, I would probably look at this and say like that doesn't look impossible. You know, we look at a lot of penny stocks and we are very like, oh, this is not likely going to happen and this and that because of it being like a penny stock. Look, man, if AMC is going the route of bankruptcy and this is what the market thinks, they're going to drive the price down. It doesn't really matter if you like the stock or not. The powers that be may try to drive that price low, you know. And if this is a definition right here, this top to bottom area is defining like that range, then it's definitely not impossible that final drop could indeed be, you know, down to like near $1. So I've talked about 226 because I think that, again, when you look back at the comparison, you probably could have done something fairly similar back here as well. Granted, this is different because it has that second move. That's the big thing that gets me right now is like we didn't ever have this second move up. Instead, we had this really late, low, flat move down like this. And it feels like there's some kind of a real strong weakness there in not having that second move, like a phase B top, and really having that second push. We just didn't get it. So it certainly makes me feel less comfortable, you know, saying that it's going to stay high and that it's going to be good. But again, like in the grand scheme of things, you know, we can look back, and this is just an example that you might use. But you could look back and suggest that, you know, really this is the spring area down here, and it's like a triple dip, right? And that this goal was ultimately to come back to this point. Maybe even using that gap up level as that support might even be more important, you know. That's one way to look at it, I suppose. And then the rest of this is really just building out over that top. And I don't think that that's completely wrong either. So there's certainly a level of like subjectivity here, I suppose, in terms of how you want to interpret the range itself. But I mean, again, cat's howling. This particular setup, the setup that we're in right now, I think there's some similarities and there's definitely some differences. Definitely some differences. Because, like, I can't really make as strong of a case, I suppose, that that's exactly what's going to happen here. Although it certainly seems possible, right? If you look at just the comparison without these diagonals there, it wouldn't seem likely that that's going to drop down to $1. If you looked at the comparison without the diagonals, you'd probably suggest that it may come back below here at some point and come back down to 226. But that's been the case the whole time. Like, it's never really changed, you know? And in the end, like, what we would maybe expect next would not necessarily be, because we've already moved down, it would not necessarily be to move all the way back up. Although I understand why some people think that's possible. I think the next potential run-up would be back to the middle. And this is what I've been saying. I think it's very likely it comes back up to 430s and then possibly just comes right back down. And it's not because I think it's a perfect one-to-one. And I think that's really important to note as well. It's really more about liquidity, like what have we traded, what have we not traded. And I don't think we've traded this middle region very much where we're at right now. So between the ups and downs that we've had, this particular area has been pretty light. And I would even suggest right down to there. So I'm going to suggest that what we're doing right now, if we're just looking at like ranges, What we're doing right now is we're really defining the next range. And so if you're looking at it from that point of view, and you're not going to get overwhelmed with this idea of like moonshots, right? Like everybody wants there to be the next big moonshot. I think that's coming, but I think it has to be after this is finished. It's just not done yet on the big picture. So if I were looking at the next range, I would suggest to you that this low that was made back here around 380, 390, which is where I was saying like we might have some problems. I don't know if you guys remember me saying like 390 could end up being an issue. There's a lot going on up there around 390. And I really think that that's kind of the big issue right now that we're going to have. But I would look at this area and suggest that that's probably what's going on. And what we're going to see is that the stretch here is used as kind of a measurement tool. So we're coming beneath it. Maybe we go lower, maybe we fill the gap, maybe we don't. But that this is about as far as we're going to go above it when we push back up. Yeah, but what if it's like this, Booksy, and it just rockets way past it? I mean, it could happen, but I'm not like sure what benefit that would be to anybody. It would just make you think it's going to run, and then it wouldn't run, because ultimately, like, it would still come back down, which is what we've done here. So I feel like the liquidity question isn't really a big question for me. I think there's very, very strong reason to be in this region. We've talked about this before, beating the same drum that I've always beat for AMC, that it's very likely we come back down. We're here. Even if we did have a push to $9, that we come back down. We're here. We're here now, right? So there's no reason to like look back and be like, well, what if? I mean, what if, right? It didn't happen. Now I'm looking at this like, okay, if this is a spring, then what we really want to see, and this makes sense, just look at the chart and tell me what you guys see, because it seems pretty obvious to me that at this point, coming back above 320 is essentially your breakout. And it would be multiple things, right? But basically what we expect is that you're going to have a prelim supply here right at this top. And then if you look at this and you consider that for a moment and then look at all the other evidence, there's certainly a lot that builds up on itself. Like one of the things is that downward trend. And I mentioned it yesterday, and I'm not sure what people have on their charts, but it seemed like everybody was like, there was like, I'm not everybody, but like we had people putting their little question mark emojis on my thing. And I'm like, this is the creek, right? Are we misunderstanding what this is? Like, I know it's a downtrend. That's obvious, but it's also the creek, and it's been tested 3 times, and this is the 4th time we've hit it. So for now, like, this is not, it's not a bad thing. It's a good thing that we're hitting it, but it's not quite there yet. And I was mentioning, like, this looked okay yesterday. It was trying to push, and then it just kind of dumped back through. And now it's like weekly trying to push back up again. If it can't find support here, it's definitely not going to get back above 325. So you can see why this would be really, really important right here to come back up above. And frankly, if it doesn't do that, then the rest of this is kind of written for itself, right? Because if it doesn't do that, then you're basically now creating like a new top for a little micro range down here. Usually what happens is that you're going to go low and try to find support. And just like everything else, it's not always broken up into 50-50s. I use that a lot, but it would be an easy enough thing to just kind of range it out and just take a look and say, yeah, that makes sense. It's in kind of a box itself, and there's a 50% marker at 308, and there's another 50% marker, and then there's another marker way back down at the bottom. If you're going to have a later move that goes down, then these would be signs of weakness. So like these would be indicating that there's still a desire to go lower. It's very possible that this makes another low and then just rockets. Because if it goes down low and let's say it hits the 292 gap, that could act as a little spring here. You see how this is building out on itself? It's actually pretty straightforward. You're like, well, why can't this be a spring? I mean, it could be. But the idea of a spring is that you're kind of dipping beneath and then you're using that to go back above, right? So if we went down to the gap fill from here, take that value, okay, that same value for that gap fill, which right now is not a lot because the bottom here was 296, so it's like 4 pennies. It's like nothing, right? Well, it is and it isn't, because we don't know if it stops at the gap or if it goes below it, but we do think that that's probable. So that like little 4 penny marker would be a really simple way of like understanding, in this case, like a spring action, So if it came back above, then where is it going to go to 325? Does 325 put you over the top? Yeah. So it's not like that has to happen, because sometimes you have what's called an LPS, and sometimes the LPS is exactly what it looks like. That's like what happened back here. We didn't ever come back down to the floor, right? We had a localized LPS right here. But do you see how that's the same concept? You take that and you divide that in half. Look at that setup. It's so clear, right? It's super clear. This is why I like this setup so much when we traded it, because it was like, wow, it's really obvious that it's not going down. And it was high and mighty here, and it stayed high and mighty. It didn't ever go back below, and the spring was actually at the 50% marker. So the spring itself doesn't set up down below this range here. Instead, it's just a very, very minor spring after capturing that level. It's really tiny, and it's like right there after really holding that level. So you see how this works from like layer to layer. So you've got like a bigger range, I should say. Really, this is a small range, right, within the bigger range, but you get what I'm saying. And that this is like the full width of it, but then it really camps in the top half and ultimately uses that as a springboard. So when we look at something like what we're looking at right now, the question isn't really a question to me. Like, it's really just about liquidity, and I don't think it matters which happens. In one case, I think you come back to probably 308, and then like we were saying, maybe it holds pretty strong, and then it has like a slight dip, and then it just goes. Maybe as soon as next week, if it's that quick. I'm not guaranteeing that's going to happen. I'm just saying that's very logical if somebody suggested it's not going to go back down. We don't really know until it hits that level to see what happens. If it doesn't form any kind of weakness, it keeps making higher highs here, I don't think there's any real reason to doubt that it could just float. We might even get like a drop today to 307, then a pop back up, and in the day basically 0%. Come Monday or Friday, it'd be more interesting to see what happens if it doesn't go down and it comes like slightly below. I'm probably going to be telling you like I'm pretty bullish, because this setup is really similar to May, right? Where you have I haven't left my calls yet. I'm not worried about those. I'm genuinely not concerned at all about them. Like, they're down a bit for sure. I averaged down on a couple of them, but like, I'm really confident we're going to go back up to the 430s. If I'm wrong, I'm wrong. I mean, there's nothing you can do about it, but you have to trade your confidence, right? So the alternative here is that we kind of make a more immediate sign of weakness spring and then head back up. These are really the same thing. One's just an LPS and one is a more traditional kind of bottom spring. And again, why would we maybe do this one? Maybe because of the gap fill, it would be motivation for buy-in. I don't know. Is it positioned to do it? Probably. Probably. If we look over here at the setup for this downward motion, it's certainly positioned to do it. There's no doubt about that. You could get there by like Friday, and it could be a very quick move into Friday. It just have to be kind of a sell down type deal. I think either way you'd bounce here, so I probably should put this over. So if today and tomorrow are really, really red days, that's not necessarily a bad thing. And then you would expect that Monday it kind of bounces back up and then probably just goes. I think it'll jump the creek for real. Alternatively, right, we hold some kind of what's called like an LPS. I still think it's likely that this is going to come down to probably to 308 again. If it doesn't, Booksy, does that mean it could possibly run from up high? Yeah. But I mean, I can't really know until a support holds. This is like outside the creek right now, as far as my chart goes, because I mean I've got it pretty much nailed down. I mean we could use like this wick since it technically raised the creek like in a really small way, but it's essentially the same line, right? So is it above it? Yeah, it's above it. It's not going to take much to dump it beneath. And at the end of the day, in the end, what may happen is I might be a little bit off about where this 50% is, but what may happen is that it kind of hits that bottom Friday and then gets ready to go for a Monday move. We don't know for sure. Maybe ends the week at 303, but it's on top. Well, that's pretty strong as opposed to, something else. I don't know. There's a lot of different ways it could go, right? We'll see how it plays out today and tomorrow. And I think it'll be mostly pretty easy to read from here. So my expectation at this point is that no matter what happens, right, whether it's a spring here or a spring here, I think it's kind of the same thing. It doesn't make a huge difference to me. Both give you kind of an adequate buy-in, and then you push out above the top. Once this thing comes back above, I do expect that it probably has a little bit of a shakeout. It may even come all the way back down depending on where that creek is. It may come back down to like 315. And then I think it's going to just take off. I think it'll be a little bit like what happened in May, but not like as, not as high, right? And I think you're likely going to come back up to this level around 350, probably hesitate for a little bit, and then head back up towards the top. Now, this is where things get a little bit awkward, right? Because I think that it goes down after earnings. I do. I don't think it runs up on earnings. If I'm wrong, I'm wrong. I mean, this could technically double top here and then make a bigger range, right? If it just goes straight up, I'd be more worried about it hitting like 324 and then maybe making even a bigger range. In which case, forget it. It's probably not going to go until earnings, right? Does that make sense? I know that sounds like a completely different scenario because it is, but like that type of scenario would be one in which you basically hit the top and then you do it again and you use that as like a spring down to kind of hit lows, and then it just sort of generates like a longer winded whatever. And that's essentially like a really weak way to break this creek. It would be like the worst way. Because it's essentially a wedge right now, and it would be, unfortunately, like not a wedge, right, if it did that. So what usually happens if that happens is that you get a, like what we would look to be for us a kind of like a parallel structure or something. So maybe like it bounces out and it doesn't leave until way over here, around earnings, out on like a parallel structure or something. Is it weak? Yeah. Do I think that's what's going to happen? No, I don't. But I could totally understand if you think that it's more likely going to sit flat and run up on earnings. I would get that. I don't think that's going to happen because I think that if it makes the bottom it needs to right here, I think it should just react really strongly. This is a pretty long downtrend, and we don't have any big reactions to the upside. And one of the things I've talked about before is when you look at the breakdown level up here and you look at where that goes, there's a few different ways to do this measurement. But traditionally, I would do it from the gap down to the floor. And that particular area should be the width, roughly, of the reaction back up, which, again, this measures out to 390, like on the dot. So, we're only going to go to 390. Well, it might be that we stop at 390, I don't know for sure. There's a bigger reaction here, like a wick. How do you know? You really don't. The best way to do it after this, if you have the idea, which we do, is, and we know that 390 is that floor, the idea would be then, what other supports do we have that's like evidence-wise that would support this? And I've already done this like a few times. I'm now kind of beating the same drums here, but this would be a big one right here. Usually there's a few setups in the middle that make the most sense. This one is not quite as strong to me because it technically like already hit, but it is there. And I mentioned previously that this is there and there's actually another one slightly higher, but these are possibly going to be used longer term. And I know that nobody likes that because everybody's like, well, I don't want it to be used. I want it to be used now. I'm like, yeah, I get it. You know what I mean? Like, I get it. I know what you want, but this is not really something I can control anyways. So like this maybe would be a suggestion that it could go up to 460. But that also, as we've been talking about, these can act as kind of a bottom pivot. And I don't think it's necessarily wise to use that as the ultimate kind of marker for success here. And there's other ones that go up farther that are kind of like structural parallels. I think that's certainly a possibility. And if it does go there, then like I've said before, I think this is like the earliest kind of area of like breakout because you'd be breaking out of that other bigger creek, the even steeper one right here. So certainly like that would be a very bullish option to break out there and try to go forward. I don't think it's as likely going to happen. I've mentioned this before. I think if it did happen, it'd have to be maybe after earnings or something, and it'd have to be a major, this would all be like a major bear trap long term. I think what's more likely short term, again, is just looking at this as if it's any other stock, in only looking at this breakdown and where the reaction happens, it just looks like it's ready to go back up and retest 4 to me. So I'm playing March 7th calls, not because I think it's necessarily going to go all the way to 450. Perhaps it does, perhaps it doesn't. But because I think that there's going to be some pretty strong volatility here for a day or two as it moves its way back up to the 390s. I would be surprised if it were really, really weak, though certainly that's not impossible. Okay. What I mean by that is like, we've got this lower scenario where it just kind of goes flat and it just kind of sits out until earnings. That's one unfortunate possibility. I have to wait to the last minute to see if those calls pay off. And at that point, they're probably going to be valued pretty low. It'd be better to have waited and bought in. On the other hand, there is a possibility that we get a series of like, kind of like bigger picture upthrusts, right? I've got this very benign, kind of straightforward going up to the top. And again, while I definitely think that's possible, then it's not quite so like crazy. Maybe over the course of a week, we're up there waiting for earnings, and we're up there for a week to distribute into earnings. That's why I don't think it would be as logical. It's possible that there's step-by-step distribution. So that would look more like a bigger upthrust here, followed by like a really shallow bottom, a bigger upthrust here, followed by a really shallow bottom, and then like another bigger upthrust. This kind of a setup is not as easy to read, and ultimately it's still distributive, but it's like a lot more volatile, obviously, going up. So as opposed to being like a steady climb, it could be a much more violent, hard to read kind of setup. So like this is not impossible either. It's just different. It's the same thing, but it's like obviously more distributive, a little more crazy. And certainly if you had options, they could be basically worthless after each dip. They'll hike in value after the pump. When they drop, they'll lose a lot of value, but they'll hold on to a little bit. So they'll be a little bit higher, and you really have to play the pumps. Otherwise, you're probably not going to get out with much profit at all. That's a way of kind of crushing it and keeping it from going through the roof, right? Which does happen. So we've seen it before. Like this area back here really wasn't the best for options because of that kind of same idea of like pump and dump, just massive retracements every time. So if I'm a bear, this might look more attractive to me. Okay. So just to summarize, there's not that many different possibilities in the local time frame. like you either go up again and you form a bigger range, like a double top, you go up again and you break out. Okay, it's super easy. I don't think it's as likely that we drop low to just keep dropping at this point. There's a pretty massive divergence on some higher time frames. It's been building out for a while. There's no doubt that's a huge divergence here. You've got buy-in. It's not a lot. It doesn't look like some kind of massive buy-in yet, but I think if you break out above 320, it's going to pick up. This is also on the outside of the creek right now. It's pushing the boundaries, so it's trying. It's trying to kind of go. I do think this looks a little distributive right now, and so I'm inclined to think it's going to come back and retest 308 before anything happens, and then we'll wait and see what happens by Friday. If it's back down here and it comes back down to 3 on Friday, so be it. If it somehow like holds here and it just rips to like 325 or 350, then so be it. You know what I mean? It doesn't really make any huge difference to me because I don't think much of anything until next week anyways. So it could be that it has a crazy Friday, but I'm doubtful. I think there's evidence suggesting that, yes, you will be up here before earnings. This would be the 19th. We talked about a February 14th kind of move, like going into that week, and that's been on the docket for a little while. I do think that earnings is probably going to be a downward move. In my opinion, I think you're going to get another dilution. I think if they pump it up to like 4s, it's either that or this guy is really obnoxious. It's either that or the opposite, some kind of a equity announcement that's more positive and then it goes the other way. I don't know, right? I would not be surprised if it wasn't dilution, it's just nothing, right? And then you end up with a pretty decent quarter, but that would send you downward into a pretty deep spiral, I think, in that particular situation. So when we're looking at earnings on Tuesday the 25th, I would imagine in my mind that we're already up here. And then it would not surprise me if we didn't actually drop. We just kind of go sideways because maybe what happened, here's another maybe this is simple, right? Maybe this is really simple. Maybe there is a bigger push here and it does go to 420 and it happens on earnings, but it's like after being up top or whatever for a few minutes. I mean, I would totally buy into that too, that there's kind of a secondary move here that gets people really excited because it's a double beat on earnings, right? Double beat on earnings, and then we go all the way up to 430 or whatever. We hit that 420 area. I'd be interested to see if we push this creek a little bit even. And then we do a distribution back down. We hit a weakness and then start selling off like the day after earnings, right? We may not even be able to participate in it. That kind of stuff makes sense to me. And I'm not saying that because I'm trying to be overly negative. I'm just saying it because I think it's very possible. So then that sells down and you're pushing back below. And ultimately, imagine for a moment that you were in charge of the stock market and you had to decide how you're going to get from A to B. And one of the easiest things to do is to just drive the price below or above a particular range in order to garner the opposite reaction. It wouldn't be that complicated. You don't have to be like, a quantum computer to think about, well, what do I want to do if I want to get back down? Just kind of push up, right? Double push up, double push down, right? So kind of like mirror the action, wind up and the unwind, right? Up, down, down, double up, double down, reverse the stock price action, that kind of stuff. You take that into consideration and you look at the measurements here, it's not really that complex. I think it's simpler than we make it out to be. Like this motion right here is this motion right here. So the motion in 2020 that went over the top is roughly equivalent to the distribution down below the range in January of 2025, right? Okay, well, the same applies for these then, right? So this push up, this double top kind of thing over the top, roughly equivalent to these, right? These two guys that pushed over the top here, they're not really that equivalent in my opinion, but they essentially represent like a mix of these two, right? So you're coming back down. It's not that complex. So like the whole idea of when I was talking about going to $8, right? And I know it didn't happen, but the whole idea of going to like 869 was that you would then drive the price back down, like the equivalent amount, and get to like your spring. And conceptually, it made sense to me because I'm looking at that as like a double flush, and like where does that land you, right? If the middle's at 450, it perfectly lands you like down towards the bottom or whatever. That concept is still valid. I mean, it may seem invalid to a lot of people because it didn't happen, but like you shouldn't throw that out. It's a really important concept. So for us right now, like even looking at this, it's like, well, maybe this dip right here does represent like a dip below that we just haven't made yet. Maybe we will make it before this is all over. I don't know. But this could represent a drop that's still in store, and we're going to then spring right after that. It would not surprise me. So what are you saying? You think it might go down to 267? I don't know. It also might represent something else. If we're not quite getting the range right, and the range is really built to a different value, not 390 but to 320, excuse me, if not down to 3 but to 320, then it may have already happened, you know, because you did get a drop right here that's essentially the exact same drop. It's the same measurement. It is. I mean, it's the same measurement. So I don't know. The drop may have already happened. Maybe it did, maybe it didn't. If it didn't, then we're probably going to see 260 before, or not, maybe not 260. We'll probably see, yeah, we probably see like 268 and then rip, right? But nevertheless, if this comes back over this top, right, and it only comes up to, you know, 380, well, it doesn't really give you a big boost, an inverted, a UT upthrust, a spring back down, does it? It doesn't really give you much at all. But on the other hand, if it pushes higher and it goes to like 424 and it checks that creek in the meantime, then already you've got like better evidence that this is going to come down low, right? And especially imagine if it does hit really high and everybody's like, woo, it's going to the moon, right? And it hits like 467, but then it craps out again. Well, this gives you another pocket of ammunition, right, to drive the price back down to the previous floor region. If the goal were just to get you back beneath here, again, let's pretend that we're running the stock market for a minute, and this is the only way that you could do it, all right? If, for example, that was the goal, and I don't think it's necessary because I think you have a lot of other elements here, right, like these bigger picture moves, obviously, that we're kind of geared up. But let's say that you had to get below this level, then based on the way we've done our range, you would definitely say that this has to come back up to like 473, which certainly seems like a possibility. That would get you back down to the floor, right? Again, this is just a theory. It's not like perfect, but it's pretty darn close to what we see in retrospect. So the 272 one, yeah, that might be right there too, 266. So it's hard to say. Maybe this is not destined to go low. Maybe it's only going to go to that second gap at 270, right? In which case, maybe it doesn't need a big upthrust. I know I'm saying maybe a lot, but we're just looking at this and we're using our brains, and we're not trying to like overly be predictive. We're just kind of seeing what those measurements are so that it's in our brain as a possibility, as a path that makes sense. This makes sense to me. If you only want to get that second gap fill, this particular move up to like 420 takes you back down to 266. Does it do anything to move this creek? Maybe. Maybe. It could. It just depends. I don't know. We'll have to wait and see what happens, where it happens, because I can't tell you right here. I mean, if it hits later and it goes to 420, is it pushing the creek? Yeah. If it hits earlier and hits 420, is it pushing the creek? No. So it really just depends on where that happens, assuming that it comes up that high anyways, which I think is possible because, again, I think that 415, I think it's a secondary target here, but I think it's a target still. On the other hand, if the goal is to kind of get you as far as you can back down, it's not even unreasonable. It seems ridiculous to me that they would possibly go all the way back up to 510. But maybe it's not that unreasonable, in the end. If the goal is to get you back down to a new low, then this is actually preferable because in this particular situation, getting back down to the low would require that you have a pretty big upthrust, right? What about this one though? What if it's like pocketed? Well, that's another question that we could try to answer, but yeah, but this would drive you to a new low to 220 right there. So that's 220 right there, which is close to where we thought it might go. I still think it's going to go to 226 as it represents a dollar value. In the previous chart. Value-wise, that's $1. So, yeah, that to me seems very reasonable. So it's bizarre to think about it going that high. Part of me can't really imagine why we would do that. It seems a little silly, but I guess it's possible. Anything's possible in the market that we go that far. These levels are all very good levels, by the way. The ones we're picking are all, they look spot on like they're supposed to, kind of. What I mean is that they definitely feel like our levels. That's the 460 area, that's the 415 area, the 390. I mean, all this stuff has been used frequently. So these arrow triangulations, I think they're not eventualities. I think they're just possibilities. I think they're very important in the nature of what they're actually targeting. So significant. Yeah. So this would be the measurement up here to this guy. This would be the measurement to here to this guy. I mean, all of those look like the right levels to be hitting. So yeah. And then the final one is this blue one, which, it may be a little bit more ridiculous, but if you were just trying to really sell back through, I mean, it's not like out of the question here that this goes all the way up to $5 and still distributes. Now, the issue that I have with something like that is kind of obvious, which is that if it were to go that high, I mean, you're creating a really wide creek, which kind of stinks for us long term. It might feel good short term to get like a higher move, but long term it's not good because like long term that gives us a lot more weakness. Well, yeah, but then it's breaking this other creek, right? Yes, there's also that issue, which is a big deal because I think that's a pretty macro trend to break. I do think that's correlating to what we see previously, with the, just out of curiosity here, let's drive this guy up. But with the shift value, these look like double taps on that creek. Yeah, this kind of makes you feel like maybe it's possible that it goes out here. Just as an extension, where did this come up and distribute? Actually, not there, but here. Because this is the distribution right there, and then right there. And you can see it, that's the same parallel. You can see that it's built into that structure. Let's see what that does locally. Sure, it's right there in March. Yeah, I mean, it seems possible that could actually come up that high, fill that gap, and not break out of a bigger setup here. It seems a little ridiculous, but I mean, it's there. So this would, in fact, drive the price significantly lower if this were to happen. This would come all the way back down to like the bottom going into April. It would definitely be like 220s. Right. So why am I looking at everything like it can't go, Booksy? Why can't you just like let it go? Because I don't think it's going to go. I think really this is built in such a way that the only way it goes is it's all the way up here. I said that much when it came up high and it dropped, that I was really lamenting that because it was just a really crappy setup for us. I mean, when you have that kind of secondary push that goes that high, you're creating like a longevity to the range. It makes it very, very difficult to know when it's going to go because you don't have confirmation of a simple creek breakout until significantly later, And I don't like that at all. I wish that it wasn't like that, but I can't obviously change that. So, yeah, there's like nothing you can do about it. It's there, which is again part of the reason why I'm like, why in the world did it come all the way back up that high? It's just a really nasty setup because now the creek is way up here. I mean, it's essentially the top of the range. It's kind of genius and it's kind of frustrating at the same time because there's not really an easy way to judge. But what I'll say is that to me this makes sense. If this were to happen and we went back all the way up to, and I don't know what happens down low here, but we'll just say it doesn't. Let's pretend it just goes down to 308 and then it goes up, okay? Let's say, for example, that this goes up to by earnings like 520, right? Then we'll also have like another wave that we can use as a measurement, right, from the bottom up. So just like we always do, we'll kind of come back and look at this at that time and see what's set up on this. And it may be that it's widening at that point. You could see that 1, 2, 3, 4, 5 here. 1, 2, starting at the top. Boom, 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 boom. Then the next one would be way up high, right? Maybe breakout. Certainly seems reasonable to me that might be the case, right? Something like that. In which case, I don't know. I haven't really done that yet, but maybe it's like a widening or something. I haven't really even considered it yet. That'd be interesting. Because you remember we had that like change of character back here? I wonder if it is just like a widening, up thrust. So it goes down, up thrust, break down low. This did the same. Down, up thrust, break down low. Come back up, test the top. Come back up, test the top. Actually, it looks like an iteration that's widening, which is actually kind of what I said might happen, which I really wish it didn't happen this way. You guys are like, I don't know what you're talking about, Booksy. Man, always got to find new things, right? On the 12th, this was a long time ago. These iterations were going for like into a let's say compression, right? And then I said that afterwards you would have a widening because it like compresses. It's not always a compression like space-wise, although usually that's the case. It's a compression of the fractal of the what we call an iteration, which is a build-out within a build-out. And so it certainly seems like this is a possibility because we said that we thought that ended right here, right around the 12th and the 13th. I said that was where the change should be. And there's been a lot of interesting pivots that happened there, but it's mostly just been academic, like, oh, it's just there. We use it as an academic kind of thing. If I went back and we listened to a stream back here on this day, I recall talking about a a widening, because usually to this point, you're kind of building up to a particular outcome. And then what you want to see, and this is probably what I said back then, what you want to see is that this comes up and crosses over the creek. And what that does is it sets up what's going to be the precedence for the next iteration. Because then, so this like micro iteration comes up, it should have, quote unquote, if this were bullish, jumped the creek. So if we went back and listened to the stream from like the 12th or whenever it was, the 9th, those days right here, that's what I was talking about. Because I was talking about how like, I didn't even see it, but it's right there. Guys, this is right there. I would never have looked at it this way back then, because I wasn't really thinking, because that looks like a higher low. But that's it. That's the first iteration right here. So when it starts expanding on the opposite side of this M cross, this is the last of the M's. What we wanted to have happen was we wanted it to jump the creek and then start an advancement above. And then every layer after that, because that would have been like the first creek. Wow, this thing's still going. This is kind of complex stuff, but it's, I don't know. If I say cool, people get mad because they're like, well, I don't think it's cool, man. Well, what would have happened is if the second M built out this way, then you would look at the next one. Remember we were doing these measurements and we were measuring how like each of these iterations, and I had like this crazy aha moment. Some of you guys were here for that, but each of these iterations was an S-curve that failed. And I was saying, like, if you look at the S-curves that fail, you're like, yeah, but this didn't work out. No, but the S-curves that failed were kind of storing up something. And that's the way we were thinking about it. And we were using that as like a measurement tool for understanding like what might happen, right, if these are storing up something. And going into these build outs. The reason that we said that, I'm kind of doing something a little odd here, I know, was because every single time you have an S curve, you get that M shape. When the M shape doesn't work, I've done this before, I know. I was saying that it's interesting because if you look back, then we went back and we looked at March 2022, and we found that these measurements were correct. That this usually represents the second half of the S-curve, right? It's like a halfway point. But when it doesn't use it, the assumption is that, oh, it's dead, it's not going to go anywhere. But what we found is that in 2022, that when you go back and you look at those movements, and this is what happened in 2022, that these little guys don't actually completely go away. So that shrinking iteration, right, eventually works itself out into like a weird kind of a micro cross down here. And this is where there's a change of character. Remember, it doesn't make a higher low. Instead, it comes up above, and now it's breaking out. Instead of doing the this pattern continuously, I know I got the colors all kind of weird, but now it's doing like this pattern, right? So like this is the first place that you see that happen in 2022. And what we found was that even though it looks like they're not being used and it's just a breakdown, that these values actually still work themselves out. And this is, by the way, this is a weird thing to talk about because I understand that what I'm talking about is a very visual kind of phenomena here. It's mathematical, and it's so it's a little complex in that there's a underlying principle here that something is being stored, like bought and is going to be used, bought and sold, essentially. So these are buy-ins and these are sell-offs. You're like, no, it's not. That's not a sell-off. No, it is. Because remember, in the second half of an S-curve, your operators already got the cause built up. They're selling. So this is like buy, and this is like sell. buy, let the market work itself out, let the FOMO kick in, sell. And so I think that the reason that these are the same, we often see that that's value is stored even, is probably for that purpose, that there's an element of like buy and sell there, or sell and buy, as is the case on the downward motion, which we find to be very consistent. And that explains why we have such really ridiculously tight covering periods on AMC, where you have the sell, right? And then you have the buy. And that's the walk down. You see how that's like essentially like the exact same thing? And then the positioning of it just so happens to be that usually this happens like from a 50% standpoint, like where you see that first ledge, it's taken down more. This is probably already being bought in from the perspective of, it's really more complex than this, because technically there's two S curves here, one down, one up. But on like the bigger picture, this would be a simple way to see it. On the smaller picture, you'd actually see it as two separate periods, where like this is sell and then this is buy, right? And then this is buy and this is sell. They're already selling right now into the top. The S curve is like being completed. I mean, it makes sense. I don't know. You guys may not think it makes sense, but it makes sense to me, like perfect sense, because that's how you're making money. Anybody that trades the stock market would see this and say like, well, no duh, you want to buy low, sell high, sell high, buy low, right? If you're doing the opposite. I just think it's really fascinating how that is built out. So even though right here it looks like it's selling down, operators are starting to buy in, and they're using the FOMO. So this is actually like the retail move, which might explain why it's sometimes a shallow S curve. And this is the retail move. Actually explains a lot. Because if the retail move is weaker, it just doesn't drive it down as low, then it could be shallow. It's not a perfect S curve. If the retail move is stronger, maybe it becomes like a really simple mathematical thing. So retail is still selling here. Retail is still buying here. And then this is institutional or operator buying. They're always doing it ahead of us because they're going to make money off of people. Some of y'all are like probably like losing track a little bit, and you're wondering why I'm doing this. Because I'm making sense of something that doesn't always make sense. Yeah, so that's kind of the nature of it. And then you have like a very one-to-one, bigger picture kind of buy-sell type deal going on here, right? That's the markdown. So what we notice is that during the mark up, this is like the same concept. But what we notice is that during the markup, this actually comes back. And what's interesting is that when it's broken and there's like a schism, it changes this dynamic a little bit, because this is where we see that slingshot happen. Weirdly enough, I kind of did this wrong. Hang on. It should be a little bit higher. Right? This is where we see that slingshot happen, and there's a strange kind of principle at play of, I don't say it's like inversion, but it sort of is. Where suddenly you get like a working out of, and I didn't measure it correctly, guys, so it's going to look wrong. You're like, nah, dude, it's way off. Sorry. when we did this, it worked. Okay, so I have to take my word for that. But when we did this, it worked because I was like, "What? It's like perfect." So when we started doing the walkout, what we found was that these values that were all attributed to previous buy-ins, these are basically like sell values. Now, I'm not sure how you would use it to your advantage necessarily. Obviously, that you want to figure that out because you don't want it to be like this is like market theory basically. You don't want this to just be academic. But then we found that this often matches like what we see here, so that equivalency matches. So these are all paired with the opposite side. This is what we found in March of 2022. When we use that, because I noticed it here that maybe that's what's going on. When we use that inversely, though, you then have to take into consideration that once this narrows, then you have to widen out. And so like each of these has its M shape. So this is M shape number 1 here, for example. Then you've got M shape number 2, so on and so forth going up. So again, like the math behind it also adds out as almost like an inverted head and shoulder. So if you flip it upside down, then you find that these values are correlating, right, to other breakdowns usually. And usually there's some kind of like almost like a crosshairs, kind of like cross hatching. I don't know if you guys know what that is, but like a grid, I guess the best way to describe it, where like that grid is playing out very, again, systematically, probably to answer, again, a buy with a sell. And so you get this kind of weird gridded approach to it, and you end up with something that looks a lot like an inverted head and shoulder to some degree, right? And this is where you end up or whatever. And this is where like I'm doing it kind of willy-nilly here just to kind of get the idea across. But this is where you would see like the bigger buy-in, and then there'd be like a big push-up. Usually there's a gap value here anyways. I don't know why I didn't have that. And then you'd have like a secondary push-up, and this would be like where you're kind of hitting the top. I stretched it out so we could see it, but it would all happen like compressed right here. So the reason I'm mentioning all this is because what happened here would then be really important, because ultimately like this becomes the new motif. So I had at the time suggested that what we want to see is that the M cross, like this guy, that it doesn't break down, but it breaks back out. And when it does that, it goes into a expansion that is upward. So upward mobility would be like this. This is an upward, this is a downward expansion. So this particular example doesn't apply because we did not get that kind of expansion. Instead, we got a downward expansion, not an upward expansion. And so what happened here is I was saying we want this to cross up and over. I'll be honest, I didn't see the first one at all. Like, I still, looking back at this, I'm like, I don't know how I missed it, but I didn't see it. I probably didn't see it because I didn't trust myself with this thing, and I thought that maybe I was wrong about where it started. I remember being confused about the 9th versus the 12th. It definitely starts on the 12th, looking back. When I look back at this, I'm like, okay, now I see there's an up thrust, so it comes up above. The first thing that happens after it jumps that creek, it's kind of weak because this was like a double top, so that would have been hard to tell, but then it goes and makes a new low. So that's number 1, and then look at what happens here. It comes back up, distributes lower. Now I'm about to give you guys kind of like, I know you're interested in it. I hear you, but I'm not there yet. So I promise you I'm trading other things. But if I get onto something, I'm going to do it. So this is the stream. I get it. But I'm also not like a dog and pony show where you can just kind of tell me what to do. So just self-respect. That's all that is. It's not against you. Like if I want to run the stream this way right now, this is how I'm going to run it. I'm just telling you. So this particular model looks like it's not expanding, but it is. So this is where we messed up. So there's a sign of weakness. Golly. Distribution. Mark down low. It is expanding. Okay. Which maybe explains why this was such a confusing hot mess down here. It was really long-winded. It's a massive expansion of what happened here on these bottoms. And it took longer, probably because of earnings. I'm guessing that it was built out because of earnings. And it just took longer. And that double bottom was the significance because it was the change in direction. It's where the iteration resets. So this is frustrating because this makes it feel very, like obviously very rigged. Because you're like, oh, so basically it's manipulated. Well, yeah, we already knew that. But what I mean is that like that expansion is continuous. So it doesn't change. Like, doesn't change what's happening just to say that it's happening. Nor does it say, like, to say manipulation. Well, okay. But at the end of the day, if it worked here and it worked here, it's going to work here, right? So the desire here would be to drive that price. We're coming to a conclusion on this. If you're wondering why it's taking a while, don't wonder too long because it's about to be done. Yeah. So the necessary conclusion is exactly what we thought, which is that walk down creates a way to build a resistance here. So in looking at everything that we've seen before in these build outs, now let's do the same thing and apply it to what we're seeing visually here. Now the first one's a little bit of a mess, but I think that it's I think it's just a simple like double flush, and I think that the top to bottom is where you're getting that next middle. That's what it looks like. So the first one looks hard to read, but it's there. It's there. It's just really tight. You can see the hits right there are right on that nose. They're right on the point that they're supposed to be on. So how do we do that with the flush? It's just basically it's like a extended 50% retrace. I'm gonna guess that's a 786 retracement. I'm not gonna measure it. I'm gonna guess this as well. It's a 786. Is this also 786? Yeah, it is. Okay, so it's a 786 retracement. So the motif here is pretty straightforward. You get a pop, and then you drop down to a new low. That's a sign of weakness. Then you get a 786 retracement, and then you chill out at the 50% mark. So the first thing that happens is the 786 retracement, and then you break down at 50%. That's a pretty important detail. So let's take that and delete some of this other stuff, and then let's consider what that does. Let's see if that makes sense based on what we've already charted here. And like if it does, then I think it gives it more credibility, right? So I'm gonna kind of fudge away some of this other stuff real quick, just so I can see better. I'm gonna leave these lines up. I know it's a little bit of a mess, but for now I'm gonna leave them up. So then let's take a look. So let's say that I can't really tell you why else it would be where it is. It's just like incremental walk down, but let's take a look. So let's say there's a double flush here. We don't know for a fact that it's over. So let's just pretend that it is because we don't know. So we're going to put it at 296. Could go lower. So the midpoint on this move, I don't want to delete that one, but I might just like lock it or something. This is like the first thing I drew. The 786 is 484. It's the bottom of that gap. I think we might just leave the gap. So the next iteration of this, if the bottom's in, and I have to just say if because I'm not 1,000% sure, could technically drop lower. I mean, if it goes down to like 267, then it puts it even lower at 474. But what this would imply is that you're going to hit a 786 retracement, which is 484. That's crazy, dude. That is the bottom of the gap right there. What a mess. Okay. So we hit at some point, maybe it's at earnings, I don't know. Maybe it's before. We hit 484, and then we come back to the midway point, which is actually right where you would think it would be, which is right here at that little gap at 405. And so then the rest of this is distribution. It had to be a pretty massive scale. And honestly, that first sell-off could be pretty nasty. So it would not surprise me if it goes significantly below, like maybe back down to, what is that value? What's that yellow line for? Oh, I think this was just us eyeballing stuff. Yeah, it would not surprise me if this has like a pretty massive retracement. And the first thing it does is it drops back below the creek here. And then the rest of this would be like distribution on top. And that actually makes perfect sense because if you do have a rise here that's pretty violent, like let's say it goes really steep into February and it does have this big pop on a double beat or something, runs up into earnings and then it dumps after, then you'd probably have like a pretty succinct sell down. Then you'd come back up, and this is where you would chop. Alexa, turn off the timer. This is where you chop above here, the halfway point. It's going to have a sign of weakness if it's going to go down again. So the this is a lot of speculation, I know, but you know, hit me up in a couple weeks if we hit 480, you know, and we'll talk again. If you think that it's like ridiculous. So I'm pretty confident it was going to get up here. I didn't know why there was getting some extended targets, but now I think I understand. It may get to 5, but I'm going to go with the 786. So I'm thinking like on earnings or right after, somewhere around this time period, and then maybe just run straight up into earnings. There's some kind of early release or something, or, oh, their earnings are actually they're printed Monday or something, but we're going to have our call Tuesday, and it runs up. And then it would distribute along 4. So this is all just selling above 4 here. I'm not going to get rid of those. I don't want to do that. I like those numbers. But what I'm going to do is make a new one. So 403 becomes like the sell wall. That's the ammunition for the downside. $250. But what we've found is that that's not quite right, because it's like more, it seems like it's more than 50%. I could be wrong. This one all the way back above the previous top. This one all the way back above the previous top. And then it drives through the floor, which is pretty close to where it should be, because this was the previous low. That's really close. It's not perfect, but it's pretty darn close to the 50% level that was used on the downward push. Again, not perfect. I wish it was. I mean, that's pretty darn close. So then this one would be, where's the downward push? It's right there. I mean, it's actually probably just as close. So the downward push is here. And it's right there. I mean, it's right where it's supposed to be. It's exactly the same. Okay. All right. Well, that's unfortunate. You're like, unfortunate that I know the truth? No, unfortunate that you had to learn it this way. You guys are like, no, you guys, unfortunate that you must face him or whatever. That's from Star Wars. Yoda. The good Star Wars, not the bad Star Wars. So this is this is the build out. Oh boy. Now I don't know. Maybe we can do like a fib extension and figure out what happened here for the next one. Man, this is just brutal, huh? This is not fun to watch. But at least we have an idea of what the build out's doing. I mean, at the very least. So this is the sell down. It's a 1618 extension. It's super basic. It's like really straightforward. That one was weaker. It didn't quite get there. Down to 1618. But we don't know, because like we haven't made the move yet. We'd have to be right about like 3 things in a row to get this right. This is hard because when you're doing this stuff, it's like, oh, it makes sense. But when you come back to it later, you're like, why do you think it's going to go there? I'm like, I don't know, because of an hour of just looking at this pattern. Like, I don't know why else I don't know what else to say, you know. 174 is the 1618. $217 is the 272. 150 is the 1854. I mean, you can kind of do the rest on your own. There's quite a slew of numbers here. I think that this is the most likely range that it goes to if we're just using the fib extensions. The one extension is 257, but it just depends on how far it goes. So even though that doesn't seem like quite right, because it's not a 50-50, it's not. This first build out that we looked at does give us the right area, right around 220. So it's not a 50-50 in that sense of, I mean, actually those kind of, again, they kind of feel right to me. So I'm not going to ignore them. It really just depends on how far it goes. So, I mean, it's hard to say right now. But you said that 226 was the dollar value. It is. That means that value-wise, it would be plunging beneath a dollar. I don't think it's hard to move to at all. They've done it 1, 2, maybe 3 times here. So this is the second move. This is not the first move. This is the move that it backs up and then it goes again. So this is the back up and then it goes again. So what we're doing is we're looking at this guy right here as like where is it kind of thing. Man, this is kind of stinky, huh? So from an iteration standpoint, it is consistent with what we see in this widening as well, that it eventually kind of hits that bottom again. I'll say this much, and I don't want people to be coming at me with like crazy like anger or something like that, because like they're like, oh well, do you just think it's going to go forever low? And that's not quite right. So one of the things that this doesn't show you is it doesn't show you the change of character. And it may seem like that's a far way off, like that's not going to happen, but it can happen. And so one of the things that we have to be careful about is we got to be careful not to overemphasize certain parts of this for others, because yes, there's a strong consistency in how this has traveled down. There's a strong outworking based on what we see here. But we don't yet have that level of, we can't get to the place, I guess what I'm saying, where you could necessarily anticipate a change of character exactly. You can get pretty darn close, but you'd have to be in a position of like, frankly, of privilege. I mean, you'd have to know what this program is ultimately trying to achieve perfectly in order to know exactly where it would eventually achieve that. So it's like you're on a train track going somewhere, you can see how the train is moving and you can estimate where it's going to go next. But what you don't know is why exactly it's going to where it's going and where it's planning on turning around. So it's sort of like an endless train, but that's what's not being shown. So like what isn't being shown here is the change of character, because at some point, just like back here, at some point you get to a place where it no longer does what it did before. And that's really, really important. That's where that breakout matters. Like that's, so you could say, oh, this is going to happen indefinitely, but it doesn't happen indefinitely. And when we look at stuff like back here, when I did the iteration breakdown right here, it's the same way. It got to like that beak formation and it's like, yeah, I don't think it's going to do it again. Usually, and the same thing right here, I was like, I don't think it's going to do it again. And the same thing over here, I was like, I think it has to go up before it can go down kind of thing. I remember talking about those iterations, like, because you start learning, like, okay, if I measure it, eventually, if it doesn't do the same thing, it needs to do something different. And then you see like, okay, that's where it's going to turn. But it's not easy for me to look at this particular setup and figure that out, because it's just not. It kind of makes it look like it would just go forever. But I think what we're experiencing is positive, because what we're experiencing ultimately is a widening. And I think that's a really good thing. because the widening is largely positioning itself to flush down to lows, but it's doing so on like a bottom, which makes me think that eventually it's going to reverse. So like the reason that we're shaking out this way is because we're trying to wiggle out as many people as we can and shake out as many people as we can. It's just another method of like operators trying to shake people out. But we're doing it in a way that's kind of dipping into lows, like as low as we can get. And that makes me think that the opposite is actually probably desired. That we're trying to get as low as we can to accumulate as low as we can and buy those shares. If it were the opposite, I'd be concerned. If it were going like flushing to the upside, doing that over and over again, rising, I'd be like, crap. They're trying to get sellers, right? This is not that case. This is kind of the opposite. So of that. So it's a good thing. It's a good thing that the flushes are trying to take us down. They're using that as a mechanical thing to try to drive the price down. So it's not willy-nilly mechanics, it's intentional mechanics. Now this is going to cause some problems because this doesn't actually come all the way up. So the question is, do I use that on the low end? Oh man. Here's what we're going to do. And let's make this kind of the last big thing here so we can finish this up. Of course that measures out to like the 9th or something stupid. Excuse my language. See, this one doesn't. This goes off to the side. I like that value though. That's a nice line, but we didn't, I mean, it works all the way back to here even. It's really solid. It makes the most sense, this one. But we didn't reach it here, which makes me wonder if we were going to reach low. Maybe that just means we're not going to reach to the bottom here on the downward portion of this. Okay, well, I'm trying to figure out what else is here. It looks like the parallel, doesn't it? Maybe this? Maybe this is where it started? There's a... Yeah, I mean, that does follow backwards in time, doesn't it? Goes way back. I wonder if it connects to this original value. We could be slightly off where we are and it might actually connect to that value. So it looks like the parallel, and I think it's slightly off. So I'm going to guess that it's the parallel. So what I'm going to do, I'm going to delete this red one. I'm going to copy this. It's too close. It just makes me think I should just use a parallel structure instead. I'm going to go back to here. So now it looks like it's cutting through the middle. It looks like the split value right there, right through the center. I feel like I did this before too, but I didn't recognize this as like a widening at that time. I kind of just saw it as like a line that was important. But now I'm looking at it and I'm like, oh, seems that might be what we're kind of following out here. Yeah, like that's the chosen setup. That's it right there. We're going to lock it. That's the one. Pretty sure. Now is the moment of truth. Let's go back to 2000. Yeah, look, the wick right there. That's the rejection wick. Now let's go back to time and just see how it interacted. This is kind of anomalous. Doesn't really make perfect sense. Same thing here. Kind of looks like it's like hovering over it. It should go back indefinitely. Did I mess it up? Oh, it was pretty darn close. Oh boy. Yep. Yeah. Okay. All right. That's like the all-time high. These are very good interactions with it too. I don't know if you can see that very well on your screen. This is like a head and shoulder around it. There's the same thing here. The shoulder mark hits it. These is like an attempt to hold it, but there's a weakness right there because it makes the lower low after the high and then the drop through. So you can see the interaction there and there. It's a bit bizarre because it's almost like two lines. One of them like hovers right beneath the other. One hovers, maybe three, kind of like a series of parallel. This one looks pretty good too, right there. See, this one actually has double top on here, and then it interacts more in this area. Jumps over, that's the support, and then it's lost here. At first glance, you might not think this is kind of working, but if you look carefully, you can see like that's a reaction off there. If you're doing the wave stuff, check that out right here. You see what I mean? That's not accidental. Like it's exactly where it should be with regard to like that setup. So this is probably like an age-old line that was used ongoing as a way of marking this down. I don't think it's anything, it may seem like it's brand new, but I actually think we've found this before in different ways. So yeah, the interactions are interesting to see. This is where it starts kind of going away from it. And then this just looks like a double flush right through it. Whoosh, like cuts right through the middle. So what does that mean, Booksy? Well, in theory, it would suggest that all distribution is actually happening on top of that line. And actually, this makes perfect sense when I look back at the cat ear structure because that cat ear structure does the exact same thing here. You see how it goes up and it pushes above? And then this is actually just like a macro cat ear here that drops back below. It's distribution. And the same thing happened here as well. It pushes up above and then it comes back up and it distributes along it. So it's just continual cat ear, like cat ear, cat ear, cat ear, cat ear, cat ear. Hate cat ears, right? And then this is like a massive, massive cat ear. And this one arguably isn't actually this and this. It could be this big picture in this. I think that's probably more accurate. So like I could draw it like this where it goes up and then this is like some kind of huge distribution cat ear that drops below it, which is exactly what it looks like to me. But cat ears are kind of whatever. Like in terms of how that looks to you visually, you might think this is it. Like this is one giant cat ear and this is one giant cat ear. I think that's probably more accurate that that's the case. You're all right, Jason. So this particular push-up may be more accurate as a way of understanding that distribution cycle. Then another thing you could do, again, it's like there's so many. Is this always like an ear within an ear kind of thing? This is the one I always kind of see when I look at it, is this one. So all of this would suggest to me that this particular setup, this particular line, isn't just a fancy pants line that Booksy found on an off chance. It really is the pentultimate kind of line for distribution. So that has done nothing but distribute over top of it. Now I'm using like kitty cat ears because it's just easy for me to understand because I have the mind of like a fifth grader sometimes. And it's just simple. I like the visuals of it, okay? But in all seriousness, when we're talking about it in terms of like a market reality, you don't have to use the term cat ear. You can just say distribution. It doesn't really matter to me, you know. The point is that this is all the distributive action that's happening, and it's all happening in relationship to this marker. It might be a little bit higher, I don't know, but I think the one that we picked is probably right. This looks like a really clean whip around right there of that value. Yeah. And then like as a macro value, which just means bigger picture, I think it represents the bigger sell through of the S curve, which makes sense as well. So we talked about this little diagram that I drew where it has like the buy, sell, sell, sell. They're buying right now. So that diagram, I don't want you guys to like ignore that. We did that earlier. But like, remember we were talking about this diagram earlier and it was like, oh, they're selling here while we're buying, thinking it's going to rocket eventually. They're using the FOMO to sell it. And then they're using retail to sell the rest. And they're selling, it's not that simple. It's not like all or nothing. So if you hear that, don't hear that, okay? It's not quite like, oh, he says they're buying and they're just buying. No, these are ranges within ranges. So within that range, you're obviously, you've got an issue, right? So that's not quite as simple as like they're just selling or they're just buying. But what this would suggest to me is that this is actually really interesting. So there may have been operators who didn't know what was going on and like who were kind of playing against the wave here. So don't hear that as well. It's not like everybody's on the same page. It's one grand operator who's selling. So they're basically opening up short positions and selling their shares that they probably bought here, right? They've been selling while retail is still trying to get this thing to go and thinks it might go. The chart shift is going to make this a little bit impossible to get perfect, but I'm going to try my best. Why am I going to this point? I don't know. I think just instinctually, I think that's where it is, but because we were drawing it out to that first flat level, the preliminary support. That's what we were doing on like the smaller scale. So I'm kind of instinctually doing that because I know there's something here that's holding it up. And it was like the same thing right there. And then the rest of it's like the sell down. There's a big reaction. And then again, a sell down. It's really the same as this little micro guy. In some ways, it's just happening within itself. Because like this is a sell down after like the flat period, which is a sell down after a big flat period. You know what I mean? Like this was just a huge compression. This is the working out. I think we're working it out. So on a macro scale, this to me is a change of character that's working it out. It's an outworking of what we maybe experience. It makes sense because when you look at the big picture and you see this movement, yeah, this is the reaction, and then all of it is to drive the price back down. It's not going to necessarily look one-to-one, but it's pretty darn close. This one actually held up at the 50% mark. We did not. We already broke down through 50%. I think that's kind of obvious. So this would be like the bigger picture version of this. And we broke down 50% pretty early. That was up here at 5.4. So there's that push up, come back to the 50%. We did it again here. That's the double top right there. And then we push below. So the question is, where in the world do I get that value from? Is it really just that? How do you know for sure? I don't know. Why are you not using like the exact floor, Booksy? I don't know. I'm just not. I'm not really positive what I should be using. I mean, maybe this is the best thing to use is like right there, but there's kind of a range here that's used, and I don't know if I should use the very bottom of it or the top of it. Maybe it doesn't matter. It's pretty close to itself. Okay, we'll just use that, and then we'll do that as the measure. So operators are selling above that, down to that price. So operators would be buying. Again, it's a little more complicated than that because you have, right now, operators would be buying down to this level, which is 311. Oh, that sounds familiar, Booksy. Yeah. That's the level. I don't know why these are on here anymore. Wait a minute. You mean that's the level that... Yep. That's the same level, guys. That's where the bar took off. Nah, you made that up. No, I did not make this up. I promise. It's right there. That's the level that it took off from, right here at 330. The buy-in is already going forth. So this is ridiculous. This is like the most backwards logic in some ways, but it's totally working, and I almost don't like that. So all of this is OP sell, op sell. This would all be op buy. I think that op buy would be, but this is retail sell. So we're selling our shares because people think it's dead. We're selling our shares from here down into their hands. I can't believe how perfect that is. And then that just blows my mind how like exact that number is. And I bet you that little extra bit here that we're not accounting for is like the extra bit down bottom. I'm just not measuring it quite perfectly. Because like if I drag this down to the lower part of this, and I drag this up to the upper part and then shift it down, it's probably going to be like pretty darn perfect. So this goes to 277. It's really darn close to that bottom. So it really doesn't make a huge difference either way you do it. But I like it, so I'm going to keep it. So this is operators buying in, which explains this volume being what it is here. I know retail bought in too, don't get me wrong. But every time this thing dropped, retail is like getting shook out again. So all the buying that's happening, they're getting sold off again and sold off again. And then the reaction here from that level is basically like a 50% retracement, which follows because so then what we're missing is the, and actually that's a lot. This is a full S-curve. This is not a shallow S-curve. So then the rest of this is like we're waiting for a reaction back up. Maybe we already got it. Because it's a full S-curve. Like, let me put it this way, okay? Let me put it this way. This is a shallow S-curve right here. So the reaction is not equal to... like this bottom half doesn't equal the top half. Let's just put it that way. Like operator sell versus retail sell, not equivalent. But when operators bought back in, and this is what I was saying earlier, AKA covered short positions in this case, probably, because selling is more than just selling, right? It's opening short positions. When they bought back in, it goes up pretty high compared to the original sell. It's like almost halfway up that value. But imagine for a moment, just to illustrate this point, imagine for a moment that didn't happen. If you think about it that way, like where this goes down farther, imagine for a moment this is essentially equal to Like it sold down really far. And essentially this is equal to retail selling equaled op selling. So it's a full S curve, like a full 50-50 down instead of a shallow one. Now if the operators buy back in, they're only going to make it back up to 307, not all the way back up to 350. So it may look different because this might make you think proportionally it's supposed to come up higher, but that's not really true. Like, it's because we sold down so low, and again, that could be partially because the shift value, we're kind of knocking it down an extra percentage, like because we shifted it down here and shifted it down here, that there could be like a built-in kind of lower low there. But in reality, what that should mean is that this move is not actually done yet. And so I think how would we do this? How do I do this? I gotta think. All right, my brain's getting lost. So I'm trying to figure it out based on what I'm seeing here, but I'm also like in the back of my head thinking about that. Let me get rid of these EMAs for a minute. I'm thinking about that shift chart, and I'm wondering if it did actually make the reaction it was supposed to, quote unquote. Because right now it looks like this is a huge amount of downward pressure, and it is equivalent. It's a full 50-50, don't get me wrong. But before that happened, it wasn't a 50-50. Before that happened, it wasn't. So before we had the shift, this would have only been the sell down. It would have been from here to here. That's significantly less distance, which is more similar to a shallow S curve. And if that's the case, and what if you have a double bottom? See, that's the other question we're not answering. Oh, I gotta think, man. Because there's other examples of this, and I'm thinking of the one in July of 2021. That might be one we could use. I know I'm making this complex, but I'm trying to keep it about the reaction and like the selling versus the covering. That's probably why this is such a massive covering, because I bet a lot of that was from back here, years long positions, multi-year positions. Because this is operators selling over the course of like 2 years. And it's not that different from what happened back here, where the operators started distributing at the beginning of the stock cycle, and it finally breaks down in 2018, but it's the same idea. This is a very good comparison in some ways. It's a 4-year cycle here. This is all like selling. And then once the breakdown happens, it's all like, you could say retail selling, operator buying. And so it's a really good example of a very similar idea. It's just that this actually happened faster. I wonder if there's a way to measure it. I don't know. Like measure how long that reaction was compared to selling. The distribution cycle started here, Actually, I have a feeling it started here because this little guy becomes like a really important, really important sign of weakness later. Like it points towards stuff way later on. So I'm not going to include the first couple of months here. I'm going to go to this like op buy-in on the 14th of March. And I'm going to go to the time that this broke down. And this is where things get tricky. Out of the LSPY, which is actually over here on June 19th. So it's a really long time period. So 1900 days. I don't know how to do this. Let's just take the time it took to break out. So let's just go to the time that it actually pops. It's 580 days. We're gonna get a loose ratio because what we're talking about is cause and effect. We're not necessarily saying that it's going to be exactly 1-to-1. Let's do this. 1910 divided by 580. 3.3 is the multiple. We know that this cycle goes from May to May. This was 2 years. 3.33 may suggest 33%, like a 33% kind of thing where it's like this is 33% of the time, right? Because you would take this and divide it into 3 parts and it would be roughly the same amount of time. It's not going to be exact, but pretty close. So the reason that would be significant, I suppose, is because maybe, yeah, and those actually look like the waves, don't they? They definitely are. And if you take it backwards to that point right here that I said at the bottom, that's even more accurate. Just visually look at that. That's like kind of obvious. Here, up, down, up, down, up, down. Okay. So that's the cycle that's being used. So why can't we just do that again? I mean, we can. We should be able to. I don't see why not. We know it's not the same length, but let me think. So this would be like, this is where things get kind of tricky, I guess. This is what we have to make the comparison. This massive cat ear type formation here, this is the peak. This is really a secondary reaction after the first sell-off. This is the mark up into that area here. So this is the sign of weakness. See that? There's a sign of weakness right here where it drops back below the floor and then it comes back up and then dumps through it. And then you have the LSPY over here. That comes back up to that. So in theory, I think it's this level. I think it's the level from May 2021, which would be the bottom from over here. Yeah, I think that's the level because this is the sign of weakness right there. And then the second distribution happens, and then the LSPY is right here. And it comes back up to that top. Yeah, and it's halfway. See that value? Here, 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 here. That's the same like distance-wise. It's like a halfway point. So how do we do this then more accurately? So from here to the first sell-off, goodness gracious, we'd mark off, I mean, it should be that sign of weakness would be the first section. It's tighter. The second section, this is where it messes up though. The second section should have been has to be where it found support. Wave up, wave down. I mean, it could be tighter than, I guess it could be to this one instead. But the weakness happened after, so I don't know. Ape may have thrown a bit of a wrench in things too, for all we know. This does look like the middle of the ears, but beyond that, I can't really say it's really convincing me of anything. It's not working. Let's try it a different way. Let's just do it the way we did the first one. Let's just do the full measurement to the place that it broke down. And then we'll divide that into 3 parts. That's a 40, let's see here. That's 3,000 days. It's about 1,000 days a piece. Well, that's not complicated. I bet it is like almost exact 1,000 days a piece. No, sorry, that's not right. That's a different number. 800 days. Oh my gosh, come on, man. We're almost there. I've said that before. 271. 271 days. I don't really care about the rest of that. But 271 days would divide this into 3 parts. That first structure looks good. The second one, maybe not so much. And you're probably like, yeah, but wasn't the point of this to figure out when it's supposed to pop? And it has not popped within that next time window. Or did it? Shut up, Booksy. No, it did. That's the May pop right there. Yeah, it did. It did. In fact, that's not only is that right, I think that's actually exact. That's disgusting. Wait a minute. So you're telling me if you figured this out, you would have known exactly where that thing was going to pop? Yeah. Yep. Yep. So now you're going to tell me that that means that the January move kind of thing already happened? I wouldn't say that. I would say that these are cyclical, and so that we don't really know what this represents aside from like a buy-in. We don't really know if that was intended to be like a markup period, if that was enough for the markup period to kind of continue forward. What we do know is that that's pretty dang exact, and I don't really think there's much of a way to fudge that. The date on this is literally Friday, May 10th. Like, I don't know if, it needed to be that perfect at all. But it is. So whether or not like this is all exact and yada, 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 I'm going to go ahead and just say that it's close enough that it's probably exact. Does that make sense? Like, it's so close that whatever is not happening here correctly is probably negligible. The fact that that's right on May 10th is disgusting in some ways. So that reaction is representative of like what would have been this wave. See, this was built out slower, and then it has a slower reaction, but it does buy back in. This one goes back to the LSPY, and then it builds out above the range that was formed on the bottom. This one has not done that, but it is technically above that creek. If you want to draw a comparison, you would say that this is what was established as the creek during that downward mark, and then this is established as the creek during the downward mark. So technically, did it jump above and hold above that downward mark? Yeah, it did. It's just positioning itself really low. But then if you do that, you're not using this comparison. Yeah, I know. This is apples and oranges. They're both here. They're both doing the same thing. It's just two different ways of looking at the same information. So what's curious to me is like, if that's the case, does that mean we're not going to have like a second real markup? I don't think so, because I think what this is accomplishing is kind of self-evident. This marker that we're talking about here, you can't forget where we started with this. As cool as it is that this apparently identified the exact day which this was going to break out, as cool as that is, I don't know how I would have thought about this before. I would have still have thought like, oh, it's going to be some kind of January style move that just keeps going. And that would have been really misleading. And I knew it was going to pop to like 13 or 14, but that doesn't mean it's leaving, right? You still have this creek above. So is it cool that worked out so perfectly? Yeah. I mean, hopefully you guys can tell like that was not accidental. You know, obviously there's something to that. But I think there's some pieces missing. So like one thing was this. So this is the first drop in, and we were talking about that selling reaction. So this is still retail. Really, this is retail selling while operators are buying. And that reaction is skewed because of the shift value. So this shifts down. It's really here. But this is that value of actual selling. So this is actually just retail selling. I might make a different like color or something, but you need to understand like it's different than it's not retail buying, it's retail selling. So this is really not the same thing. So this is operators buying. They are selling, don't get me wrong, they're selling something to help drive the price, but it's mixed bag, right? So it would be like them selling the first half and then buying the second half, that kind of thing. Whereas this is actually predominantly just retail selling. Some people, again, are going to be participating in both sides. But again, on the big picture, we're just going to use this because I think that's the more accurate for the larger picture. So let me repeat that just really quickly. What I'm saying is that when I say this is an op buy-in, it's still like half sell, half buy. And then the second half of that would be half sell, half buy. And then the second half of that would be half sell, half buy. And then the second half of that would be half sell, half buy, all the way till the bottom. And then it's the outpouring. So these things are not complex in the way of, like, when I look at it big picture, I'm just showing you like this is the simplest one on the big picture because this is the big one, 1, 2. But really within this, you also have a 1, 2, etc. Okay, so it's important just to kind of point that out so people aren't like, oh, he's saying that they were just buying this whole time. No, it's not like that. It's really iterative, right? It's like within itself, they are doing something like that every single structure. So this would be like buy, sell, right? And then vice versa. Like it would just keep going. So as it's distributing, it makes a lot of sense because as it's distributing, you would be losing sellers and buyers as it's going because it's eventually going to exhaust itself. So it's not it doesn't go on indefinitely because eventually this like kind of runs out of steam, right? So these cell walls that are created are constantly like being knocked down further because the operator is buying lower and lower and lower, and they're selling at lower prices as well. But majority of this time, retail is just selling. So I'm making it a very simple, like, here's how it is, like really like cookie cutter. But just remember that it's not quite that black and white. So what we describe as, and I'm not trying to belittle anybody, I'm literally just feeling like I need to clarify that. So if you think that I'm being condescending, I'm not. I'm just saying for me, I need to kind of think about that because it's not quite right to say that they're just doing one or the other. It makes a lot of sense. And you start looking at these as levels and you're like, oh, okay, I get it. That's the waves working their way down. And the waveforms are getting knocked down, knocked down, knocked down, knocked down. And that's the compression happening here. It's probably pretty accurate. I bet if we divided this in half and then in half and then in half and half, you probably end up with the final bits being right here in their proper place. So anyways, so that's the way it's going. So they got retail mostly just selling because people are like, this is garbage. They're buying at the wrong times. They're buying on the upside, which is all those people from tips for trading or trading tips or whatever that were buying over here when it was going up. And I said, don't do that. And they were doing it anyways. So the retail crowd is often like buying at the wrong times when they're presuming it's going up and it's really not. And we're trying our best not to do that, but there's still like elements of that. Like everybody gets jacked up by the operator because you think that you're at the bottom and you're not. You don't see the bigger picture. So I think that this little guy, this retail cell, is very important. I think this represents the actual reaction as opposed to the big picture one. So the big picture one includes the original values, which I think are still there. So that's why I'm going to keep it. But it ignores the shift value in the second half because this is where like all of this stuff has to be kind of thought of together, because if you can't do that, then it's going to not make sense. But the shallow S curve exists only on the chart that wasn't shifted, which is the value chart. The full S curve actually exists on this chart, the one we have. So the full S curve includes the op buy, op sell as equal parts. It looks like a full 50-50. But in reality, according to valuation terms, which is what your computerized trading would be looking at, in terms of valuation, it would actually be more akin to a shallow S curve like this, which is why the initial reaction isn't quite what was maybe expected, and then the value is shifted down. So another question would be, well, are we due then like another reaction? I don't know for sure. I think if you were using like the same logic as it flows, then there's a missing piece here. So the missing piece is this, in this quote unquote cycle of ours, is that we don't have this included. It's not included in this. It just isn't. So what is this? Well, I actually included a little bit more than I maybe needed to, but I think in the end, it works pretty well because that ends up being the bottom, right? And then this ends up being basically the top. But really, like, this goes up again, and there's a gap period. So this little gap period is, I don't want to say it's unaccounted for, but it's unaccounted for. Like, obviously, there's something there that needed to happen to kind of reach the goal for the liquidity, but it's not in the cycle. You guys are like, I know what it was. It was a buy button removal. Yeah, but we're ultimately talking about something else. We're not talking about that because we're measuring this out based on the drop here to the recovery here. And then there's a reaccumulation phase, right? So even if we were like, oh yeah, that's true, this is what's happening, I wonder what if, I mean, it's kind of weird to think about it that way though. But it might be true. Where is that value that we just bonked our heads on? What's that number up here? So whether or not, again, we like this, it's kind of irrelevant. They already created a SOS region for us, which is right there. It's from 154 to, what is it, like 596? The high here is 596 to 154, or 5.54 to 5.96. Oh boy, I think I know what's about to happen. Oh man, yeah, I think I know what's about to happen. I need to see this a little differently. Hang on. Oh boy. Oh man, what a mess. You gotta be kidding me. Oh yeah. That's where those tops are. Those are the same numbers on the valuation chart. And look at where they are on that bottom. That's your head, your ceiling right now. That's the valuation chart. Like, that's right where it is. Those two values that I just marked off, those are the SOS values. Goodness gracious. You're like, who cares, Booksy? Let me put it this way. When this thing pumped up, right, it creates multiple tops. When it goes into the reaccumulation phase, it's not exactly very, very ugly like the one we have, right? The one we have, it looks pretty ugly. This would be seen as like a pretty substantial backup, right? And then a reaccumulation. But notice that it generated very quickly two tops. I think it's about to come full circle for a lot of you. Because I know where this is going to go, and I think some of you do. It generates two tops here, right? These tops both walk down. They're laying up. You're like, wait a minute. I thought you said we were in 2020. Well, don't get me wrong. 2020 is still a good example to use. I don't think it's necessarily wrong. Okay? I don't. And I'm not saying that this is something brand new either, but I want to like point out what I'm seeing here and why this matters. Because this also came low and then comes all the way back up, and what appears to be a change character starts dropping down. Now, in this particular instance, we don't have the same thing happening. We didn't go up into an SOS like immediately. That could have happened. If this had dropped back down and held that 460 level, remember that? we were talking about how like, oh, if we went back to like, if we went to 460 and then pushed back up, it would have looked almost exactly like that right here. It would have just been really, really wide. Because you had a top here and never hit that top again. It just distributes down. Just a big bowl. And then it comes back up, hits a second high, which marks off the bottom of the range. It's perfectly like the bottom of the range according to what we saw back here, because that's where we were looking at that, saying that was actually dipping below the bottom. We think that that's the case based on the way the range actually is. It's not like the definite bottom is actually dipping below it. That's where the SOS is. So had this stopped early right here and come back up, it would have been essentially like a 1-to-1 reaccumulation setup. Even though it made some weaknesses here, it would have worked out. Because it goes down low, we're looking at it more in terms of like, oh, it's the M cross that didn't cross up. So it doesn't do like the S curve that you're expecting like this. Instead, it's like this guy where it doesn't cross up and it goes down low for like a spring. But this is where things get kind of like super significant. Okay. When this happened, this goes up to the previous floor here, which is defining itself as like the bottom of the original distribution, right? The bottom of the original distribution. Just like this is the bottom of the original distribution. When we go backwards, you're like, no, it's not. The bottom's up here at 35. Yeah, but then it got shifted down. Right? We know the chart shift isn't that significant, but it did get shifted down a bit, about half of this range to be precise, because it's going to measure about halfway exactly, I think. Because again, when we did those shift values, everything was just halfway, like halfway farther, 50% farther, which it amounts to a 226% shift if you're multiplying. But really, like when you look at the ranges percentage-wise, it's really like half this distance. It's like this distance right here. That's the shift value right there. It's a measurement that was taken from the way this chart typically measures out. That distance is not just there. It's like here. It's like each of these little stacks is those distances. So like every one of the ranges is like the same, essentially. So it's built on a simple, like, I think it's like 100%. It's super basic. It's like a really simple 100%, chop it up into 100% segments. There you go. Everything works pretty well. I've done that a few different times, a few different ways. It's almost always how it is. So it's about 100%. And you can layer that up, and then you can see all those levels. That's just markup, markdown kind of things. On a logarithmic chart, it's about 100%. But they took that value, I think it's 100%. I don't remember exactly. But they took that value and they used that value essentially to shift it, but they had another thing that happened in the middle with the conversion of ape. Anyways, you get to this place where that becomes like a 220% multiple that you can use, or basically a times 2, like 100% times 2, right? Plus a little bit because of the ape thing. And then it's 220%, 226%. And when I'm looking at this, I'm like, oh, okay, so what you're suggesting, Booksy, is that you're basically in a January markup. Well, yes and no. If the January markup had not gone up here to the top, right where this SOS is, what do you think would have happened? Well, some folks would say, well, if it broke down, it would have just broken down forever. Like, oh, if it had dropped here and like gone low, then it would not have ever recovered. But that's not quite true, because we know for a fact that this is a higher portion of a larger range. Like this still had a bottom here that it could have technically came down and double bottomed and still reacted. And ultimately, like this in and of itself is broken up into two parts. You take this back previously, and it's like that could have come back down into this lower portion. It wouldn't have been like the end of the world. It just wouldn't have, because it would have been trading here, which would have been on the top, previous tops, right? It still could have acted as support if it had found support. It could have even had a spring action in it. We know this because of phase B This is essentially what we talk about all the time, is this little silly model, right? And that's the same thing we're seeing here after this point in time. It's like that's the motion right there. There's the cat ear. But instead, it goes into what we call an LPS, where this stays really high up. The cat ears form, they're still there. And I've done the comparison, I've shown you guys the comparison between this and 2021. It's uncanny until the very end, when instead of jumping up and over, right, instead of doing that, it butts its head up against the creek and then goes down. Well, we can assume that, but we don't know for sure. It could have still come down. Yeah, but this was in a markup phase. And I can tell you for a fact that GME has had a few of these that have done that second drop for a spring and still reacted. And it looks like a giant bounce. And that's the kind of thing that you see when there's a spring action on this type of motion before it goes. I wish I could kind of find a perfect example of that, but maybe right now I just have to sort of do the trust me bro thing. This might be a decent example of that. You can see the push up, and then the second one has a deep bounce. But I feel like there's better ones because I've seen it a few different times. I know there's better ones out there for GME. This is the example that looks a lot like the 2021, right? You see the bounce up and goes over and over. That one's pretty close. I wish I could find a good example right off the top of my head. This is not a good example. It's probably something that I've seen like intraday, but I don't have a good example off the top of my head. Like I know I've seen it. It's kind of like this, where it's basically just a flag instead of being a, which is more traditionally like a Wyckoff-ian range anyways, which is just like a flag of sorts if it has a spring, because it's usually in a channel making lower lows until it's not. So it generates like a flag motion. It could have still been a breakout. We would have looked back on it differently now. And obviously that wouldn't have been like the strongest thing, but I would not have been surprised if this hit like a spring. It could do exactly what happened in 2020. It could hit a spring and then drive low and come back up again. It's totally possible. And it still could have been bullish as all get out. The same thing happened here. It just bounces out, it stays down, it springs and then goes. And before you say, yeah, but this was distributive, well, so was this, but this is just longer term distributive. So this is an example of like a similar pattern. It's really much more like this, where it has the, it's a reaccumulation schematic that has a spring, basically. And I could probably just look that up. I'm going to look up reaccumulation with a spring and see if I can find I don't want accumulation with a spring. This AI stuff is garbage. I want reaccumulation with a spring. Here we go. I don't want this one either. This is a good one. This one's not the best. I don't know. There's a lot of different examples. I take it back. I said this was a good one, but reaccumulation with a spring looks a whole lot like distribution, which I don't like. And I've talked about this before. It's a very tricky one to talk about because it really looks so much like distribution that it's basically super confusing. Here. So let's take a look. So this is This right here is reaccumulation with spring action. Oh, that's not what I want. You see that these two right here are basically like the two different ones we're comparing. One is like it doesn't have a spring and it just kind of marks up and goes over, in which case this is defined where the SOS is, those two tops. That's what we were just talking about. This is one that has a decline and then it does a thing with a spring. That's kind of more similar to what we saw in January. It's a declining reaccumulation after a decline. So it goes back, has a backup, and then this reaccumulation really happens in like the middle of this sell-off. So it would be like if this pumped up really high and then happened up here in the middle, right? But this is essentially what happened here. It's exactly the same. It's very one-to-one. It's kind of freaky. And this is one that has a spring. You see the difference? So it's not like significantly, the spring couldn't have maybe come as low as I drew it. It'd have to have been like right here to like 40, 50 or something, I guess. Maybe not significantly as low as I drew it, but it would have been like this, which makes sense. So that is totally possible. I said I was going to bring this full circle, and I'm trying to. Basically, what this does for me is it doesn't do like a lot to necessarily quell any kind of really recent fears or worries or anxieties, perhaps. But what it does do is it gives it a sense of continuity, because if those are the two tops that are generated, and I think they are, and then you go back and you look at where that is on the valuation chart, they're basically positioning this thing as a reactive move off of this bottom right here, which was a previous bottom used in a distribution phase, or excuse me, after a distribution phase for accumulation. So we're now like kind of pushing away from that bottom. I think what we're doing might be better associated with this though, because in reality, like what we're doing is we're trying to react off the bottom. We're reacting, being pushed down beneath this floor here. It's not quite as black and white when you think about it that way, because all of a sudden this setup doesn't feel like a just a carbon copy of like 2020 or something. Really putting this in its place, and I know that proportionally that's probably wrong. Hang on, let me try to fix that real quick. Let's see if I can get that right. Yeah, that's not right. At least get that proportionally kind of right. Putting that in its proper place, and you can see like the setup looks like that. So if this were a spring, it wouldn't have come that low, perhaps. And I think that might be the argument, is like, well, yeah, but if this is a spring, then this went too low, and there's too many signs of weakness, and yada, yada, yada. But again, I'm not trying to necessarily say they're one-to-one. What I am saying is that this particular setup, what it did is effectively, man, it's like really kind of clear now. Clear as mud, but clear. That liquidity shelf is your springboard. And I think that the overall move I think we were right. I think it's still where it is. I think it's in near the 20s. And I think that the overall move, man, I got to get to the conclusion on this, though. It's not enough just to say a bunch of fancy stuff. What's the conclusion, Booksy? You gonna pull pull a Dave and just say it's going to the moon, or what are we missing? We're missing that element that we just don't have because it's such a long-winded sideways action. We just don't have it. I suppose you're looking for that cycle. I already talked about it being like a 2-year thing again. Maybe that's the missing element. Like the reason why it spent the extra time in the reaccumulation is because it wasn't time yet. There's almost like a maturity expected from this 2-year cycle here that hadn't happened yet. So ours is not due yet. It's not due until August. And I think that August to August matters. The 2-year cycle might represent something else entirely, but that's roughly where I would place it. So what's confusing is that we had this really long extended, we're missing like that markup phase. Anyways, I'm just talking to myself at this point. You guys are like, great. When are you going to include us? I don't know if these measurements correlate to the other. I think this is going to take longer than I expected. If I'm going to try to work it out, I might do it in my own time because I don't want to waste any more time on the stream on this. I at least want to look at some other stuff today. But for now, the two big takeaways. Number one is that I think timing-wise, we're not wrong. I think we're in a pretty good spot to assume that it's probably not going to do much until May, and then maybe August, meaning like essentially it's a summer move. We've been talking about that for a while anyways, so that shouldn't surprise anybody. This would not suggest that that's when the move actually happens. What this would suggest is that's when the move breaks out from the subsequent top. But here's the clincher here, because this could cause a lot of disruption if it happens this way. I had for a long time kind of made an argument that this was the top for the purpose of our illustration. I think it is. I can't quite put my finger on why, because that's what really is where it is. I mean, those two lines that I drew, you're looking at it now, you're like, well, yeah, but those are also still there, and we reacted off of them. Yes, we did. After the shift happened, we still reacted off of them. So the valuation chart is weird because it's like we're interacting with both at any given time. So even though this valuation would suggest that you're here, and this was a 50-50, this lower area is like a 50-50 M cross, boom, boom, right? Really nice M cross rounds that liquidity level. It's changed, right? Because now it's lower. And so the question is like, well, what would your expectation be if this hadn't shifted? I still think it would be much the same because we would still probably expect there to be a reaction up. And if it doesn't break that creek, then, and it only goes up to like what we're thinking, which is right around here, around 430 or whatever it is, or maybe at most like 470, you're still in a position of weakness where you could not have a change of character. We've already talked about what this looks like if there's no change of character. We've seen it 1, 2, 3 times or whatever, 1, 2, 3, and then this final reaction would be a 786 retrace followed by a 0.5 breakdown that then pushes you really, really low. So if it continues to do the same thing and it doesn't have a change of character, which is this, it's a variable that's like a lurking variable. We don't know where it is. We know it's there, but it hasn't happened yet kind of thing. If it doesn't have a change of character, then the expectation would be it would probably look more like 2020, right? But there is an idea here that's kind of interesting, which is that if this for whatever reason doesn't finish low, like it comes down and maybe it just gets to like 3 or something here, that, and or this comes back up and holds above because it is in the right spot. If it held above, for some reason, it held above 4 and it didn't have a sign of weakness here. So during earnings, if let's say it pushes up and then it comes back down and it elevates itself above 405, it may be holding that range, in which case that actually could be seen as a, for lack of a better word, I guess that could be seen as a really deep terminal shakeout. If it's a terminal shakeout and that doesn't capitulate and go lower, I don't think it's necessarily out of the realm of possibility that this just kind of pushes right back up to the top of the range and just goes. But here's where the rubber meets the road kind of thing here. Here's where things get kind of odd, is that when you look at the overall reaction, it would make more sense if that pushed off of this middle bar that we've been talking about at this point. It would make a lot more sense. Now, it doesn't have to, but it would just make more sense to me, which is significantly lower. It make more sense to be down here at $2 or even $1.74 down here after this sell-off. You can see why, because it's like in the right spot. If it pushed up and then sold down, then it could kind of land on top of this. And I actually find that to be really strong, even though it would feel like garbage. If it landed on top of this and reacted away from it, there's a greater chance that we're going to get like a bigger move out of that all in one go, because traditionally anytime we've kicked off of that with serious strength, it's been pretty strong. Most of the time we're reacting off of it, right? One time that we kicked off of it with serious strength was in August of 2022, right? And that's an example of one that like really propels you up quite far. That was a big move. So if you can see it happen, it makes it pretty easy to predict that it would be kind of rocket, so to speak, off that marker. It also represents the original kind of distribution setup here. So going on the outside of that, I think what that does is it probably demands that you go test, and I'd have to double check where this is, but it probably would demand that you go test this widening. And we had talked about that a while back when I did the wave chart, and I brought that up recently just to kind of like talk about how really a lot of this looks pretty close to what we were expecting anyways. I wonder, did I mess with this line? I think I did. Should not have messed with this. Wait, what? What's going on? It's like way off now. Oh, because I'm using the wrong chart, Booksy. Just staring at these charts, getting all confused. Sorry about that. What if there's no intention of breaking out? You guys are like, shut up, Booksy. I hate you. If you go to if you go to like 174, if you end up getting low, I don't know, dude. I think that shift might throw you off. Because like one of the things that we didn't really talk about was the second buy-in here. When there's a reaction off the bottom, if it only makes it to a certain point, like in this case, it goes back down and tries to find the floor again. And I wonder, oh man, I really hope that's not true. So how do I do this from that point of view? I need to think. I keep bouncing back and forth between the two ideas, but I know what I'm trying to think of and why it's important. Because this would represent like the floor that ultimately marked off like the totality of the move. It's a perfect 50-50 from here to where that May move is to where the top is. It's like right where it should be. And so if that's the case, then our 50-50 is really low, right? You guys are like, well, that sucks. Yeah, it does. That's not low enough, right? You guys are like, well, that, what if that's wrong? Blah, blah, blah. It suggests that that's like the halfway point of the range, and it probably is, because that's 1290. It's right back to the next actual floor. So weirdly enough, this chart shift is making us interact with the same level in two different like dimensions. It's so stupid sounding. In two different dimensions. Like, all right, I'm out, Booksy. I'm done with this crap. In the valuation terms, it's already interacting with it. But we haven't actually interacted with it on the clear chart right now, the same level. And the way this is positioning, it's positioning in a way that makes me think that 1290 may actually be in view. What's confusing is that it then begs the question, are we really going to only go to 1290? That doesn't seem like nearly enough. But hear me out. If this were to drop down low, like we're anticipating, and it goes really, really low, I think we would have to concede that this is meant to be like the 50-50 level, which it may not seem quite right to us at this time because we're thinking like much bigger. We're wanting to go much, much farther all at once. But I actually think that might be right because that's the next available setup anyways. It's like you need to go down there. Meaning, well, you need to go down if you're going to go back up. This is a bizarre setup. Speak English, man. You need to simplify it, Booksy. $5.54 is the middle. That's what that means. 554 is the anchor of this range. It's like the centerfold of the range. And regardless of whether or not it's interacting with it in some alternate, it's really not an alternate universe. It's kind of a stupid thing to say. It makes it sound like science fiction. It's really alternating points of view because it just depends on if you're using valuation versus the chart. So if 554 is the middle, then there has to be a top and a bottom, right? And the way that we're doing this, we're kind of assuming that the bottom is actually more or less around like 291, right? But we're going to use this as an extension. So I'm going to use the low at 238 as just an extension because I know it went below there. And it's starting to look more and more accurate to me that that's the case. Yeah, so again, roughly estimating that, I think we're going to find that that's probably right. I'm going to double check this value. 556. Why did I say 554? I don't know. Maybe I mixed up some numbers. Maybe it was 94. Who cares? It's 556. It's the center mark. I know you could just do the math and figure it out, but I'm going to let's kind of bring this up. So it's $13, which is dead center in the middle of this guy anyways. It's slightly higher because it's 1255 versus 1350, so it's slightly skewed. It's like 1303. And yep, that's it. So the top of the range is in view here. And it's not 20. Screw you, man. I'm waiting forever for $20. I don't know that you're not going to get it. And I flip-flopped a lot between like 13s. You know, we talked about 1380 a lot in the past. And something a little more like relaxed. Like 13 versus something like 20. And why 20 seems significant is because of a larger setup. But if the goal here is not ultimately to get to a breakout level, then I'm afraid that we might be up the creek a bit, because the way this is set up, if this dives down too low, I'll just put it this way, then the setup is really designed to get you as a 50-50 above 556. And the fact that this was designated as the level during that markup that happened right here in May makes me think that that's actually like the floor. And that's not really very pleasant to think about, is it? So I got to be just like as straight-laced as I can with it. Anytime we talk about these type of things, you just have to kind of take it for what it is. Not for what you want it to be. So if the 2-year cycle is the same, and man, this is starting to look like it's just like half of a cycle, isn't it? This could be really long-winded. What about the February 2026 stuff? I don't think that's gone. I just think that we have to kind of take it again for what it is. I don't think it's gone. I think it's still there. I just want to work on this for now. So this probably represents the creek, and we can't really see it very well because of this silly chart being all what it is. But where I've drawn this out is about right. And we'll hit that eventually. And it's going to be probably pretty low. If it hits 160 or something like that, then this only comes up to like maybe 20 at most. But I think the goal is any kind of a dip you make below the bottom now is only going to be met by a push above the top. So what's changed here for me is that this represents like the middle value, not something else. And it's not like that was way out of the question anyways, right? But that is very, very, very important to consider, because now you don't really have any guarantee of big price movement. It kind of makes me think that anchoring this guy on the center is probably the wisest thing to do. And that this represents, even though we've got all these other nice values that could they could still happen, because you could have something change that's not exactly the same. Again, eventuality versus something being, possible or probable is very different. But we're pretty confident that this is a widening that's attempting to try to get back down. So the reason that they're going to go back up right now, you guys are like, well, I thought you just said it could break out and go. Yeah, but that's not the motif here. So I was trying to make a point that like this is different because it didn't have the cross up back here in December. It could have. That would have given you that January run up that we were all kind of wondering if it was going to happen. It seemed possible. And looking back, now I think I understand why, because that would have set up appropriately had this held. Basically, I had to hold 440, and it didn't hold 440. If it had held 440 and pushed up to SOS, it would have gone, because it would have been like the breakout in January, essentially, into June. But the motif here was demanding something else. It was looking for liquidity by going higher and higher and higher in order to drive the price down lower. And the conclusion of this is that we are now stuck in, unfortunately, an iteration that's really bent towards downside. And the goal here would be to do a Fibonacci retracement of about a 786 retracement, where this is the middle, right, that we're going to kind of break down from. So I don't have to keep all this stuff on the chart all the time to kind of illustrate that that's what's going on. But it's very important to understand that like that would be the goal of bringing it up if it's distributing. The only way, so this is going to be pretty easy for us to tell at least, the only way that this becomes bullish is if this is a terminal shakeout. This has to be what it is. It cannot be anything else. This has to be a terminal shakeout followed by a push that holds above this previous bottom over here. I don't think there's much choice in that. Like if it built out maybe on top of it, I guess you could argue that maybe there could be like a little dip, but it has to build out like entirely above it. Like it needs to be very obviously like holding strong. And if it doesn't do that, especially if it comes down and it sells through this creek, this guy right here, if it does that, I think almost without a shadow of a doubt, it is going to end up being distributive because the operator has been very consistent in this. And so there's no real question about it in my mind. If it comes and makes a sign of weakness, it's probably going to drop back down, right? Now, I don't know if this is all going to happen all at once. And if we're chopping, I wouldn't be surprised if we're waiting for some kind of dilution news, right, at this level at like 403. But you don't want to be sitting underneath 403 pushing down low continuously. It's just not a good thing. And my guess is that by about March, again, we probably start selling back down and thoroughly come through and check everything again one more time on the way back towards the twos. It's going to be ugly, but the good news is I think that we were right about the whole idea of it coming down into maybe April or May. So this would be like the worst sell-off if there is one like that. It would probably be the most painful one. And we're talking about, yeah, maybe even sub $2. It could come down pretty low, pretty darn low. And based on what we're seeing here, if the goal is simply to get the 50-50 wrap because of the nature of the actual selling that happened, the covering that happened like there, then this is really the design, is to get you down on the widening here in order to break back out. And that's kind of it. There's not much else to it. I mean, it seems like I'm leaving out something, but I'm not. What at the end of the day is like, that would only be enough to get you maybe to 18, maybe. And I'm really concerned if it comes down lower than that this shifts down even farther, because I think this is ultimately like where that big move is going to be. And it's not looking like it's designed to do anything except wrap around 556, which I didn't know about till today. So if you're wondering if this was a big waste of time, it's not. I didn't consider that till today. Now, the good news is, for those of you that want some good news, is that if this thing did drop down to 160, you're talking about 1,000% move to the upside. And at the end of the day, this may not seem very likely to you, but this is actually a really succinct setup. Like, it's pretty straightforward. And I do think it's fairly likely that this happens. One of the things that we're kind of talking about that might be missing a little bit is this guy right here. But now looking at it from this point of view, I don't remember what the extension was to the upside. But looking at it from this point of view, it actually makes things a lot easier. Wasn't it like 1320 or something like that? What was the extended hours? I don't know. I thought it hit 13, like 30 or something like that. I'm sorry that I spent all day on this, but it's been a long time since we heavily charted AMC. I think it was like 1330. Yeah, so it is a a situation where it's kind of demanding, even if that is the halfway point, that S curve would at least come down because of the way this is. That S curve would at least come down through the bottom here and go at least to 230. And the 226 is still likely in my mind. I don't necessarily think it has to come that low, so I hope you guys are hearing me right when I say I'm not really sure. 1,000% sure, it's got to go here, here, here. If it hit 226, I don't know, this changes quite a bit. And I wonder if 226 is more likely, like that could be like a really strong, like definite, like we're making a spring, but we're not gonna go down super low. And this marks all the way up to 2731, which has no meaning to me whatsoever, but it is pretty close to, it's pretty close to this bottom from over here, for whatever that's worth. It's the same size move, it would just be in a different place. Man, there's so many other things we could look at, but I don't really want to do it anymore. There's a lot we could look at here, but like I said, I'm kind of burned out. What conclusions could you draw from this? I'm worried right now that because of the distance between these legs, that we're really experiencing something more or less like what happened in August. And I don't want to make it like it fearful or something, but we're basically trying to get up here without breaking out. And so if this ended up selling down low enough, it's hard to know exactly that number. Well, it's not that hard. I guess we just need to make sure we keep it really precise. You just got to be careful not to scale this or do anything weird. I definitely think we're right about 556. So if the question is like, where is the middle? I think 556 is the middle of the measured move that we're about to make. But if the question is, where does that intersect, and this is what I want to know, where does that intersect with these two values, this being the highest possible creek, and then this being that cat-ear value? If you did it in a way that you didn't want to move, I'm not sure if it's possible to do it. It's really close, but it doesn't look like it ever quite, it's like way out here. I mean, you'd have to delay till September. You guys are like, please tell me it's not like $1, Booksy. Okay, I won't tell you. I hate this. You're not going to like this. Oh boy. $556 stops you just short of an AMC debt to equity deal. Well, that makes sense. I'm having trouble like imagining what this is doing in that valuation chart, because I don't know how you could do this and it makes no sense to me in some ways. If this is at $1, So there's a lot of things that you have to kind of take with a grain of salt here, right? Like obviously the 550 is no longer the middle if this is the case, because this would be like the middle is actually here at $3.40. Lord have mercy. I'm really not feeling this because it's too the numbers are really tight and I really don't like that. But yeah, basically you can go from $1 to $12.20 or whatever, which is really like this top. And it's essentially perfect. So that's the same measurement. We're doomed. How could it be that bad, Booksy? How could it possibly be that bad? It can't be that bad, right? Surely it's got to come back up, the wave. No, it doesn't, because the wave doesn't end until February 2026. We've talked about that a million times. It doesn't have to move until then. There's an indefinite period here where it's like a number of things could happen. If this failed to jump over, I don't know how this could happen like long term. I guess what you would see is some kind of like a micro trading range down here. It seems ridiculous because I can't imagine how that could happen. But I mean, but that's the nature of this, right? It's all hard to believe, and then it happens. If the goal is to drive the price down and do like a 2020 type markup, maybe even bigger in 2020. I don't want to think about it going to $1. Son of a bee. $42.93. $43.30 and $42.93 is pretty negligible. I mean, that's me just kind of eyeballing something. Mm-hmm. Okay. What are you thinking, Booksy? the buy sell, right? You hope that it's not going to be brutal and that it doesn't cause you to drop through. When we talk about all this crazy stuff today, really interesting, but really the idea here is you're setting up positions, right? You're setting up locations that you're going to do things. The concern that I have is this first up thrust doesn't go beyond the top. I mean, it doesn't push the top. And I said that before, it didn't go far enough, yada, yada, yada. It didn't go far enough. It needed to kind of push the creek, and it didn't. It does touch some of the creek. If you look at the valuation chart, it doesn't push it. It doesn't push it at all. And so the problem is it just kind of stops short and then drives the price back down and doesn't push it. And so it would seem like the 2020 model is the more obvious one here because it's like, oh, well, that would just hit the bottom, have a spring and go and be just like this. There are evidences of that. We've done it before. So before you guys are like, wait a minute, but you said this, you said this. Yes, I did. I did. And I don't want that to be like taken away and say like, oh, well, it's, now suddenly it's different. Well, consider this, right? We had talked about this guy for a while, and this is the one that's like the trend down. Now, look at where that is on this chart, right? It's 160 if it hits there again. Now, we're making some snap judgments about exact values and stuff like that because I'm just kind of throwing it up there, but, this is a pretty exact thing. This is not me making up weird stuff or whatever. This is just a trend. It's hit 3 times. If you hit the trend again, you're going to come down to this bottom. You can see here that the measurement for this tool, the build out measurement for this, right? If it hits right here, let's say it hits both at the exact same time, it would be in June, which is kind of far out. It's not April, it's not May, it's June. So if it managed to hit these, and I'm not saying it will, but if it did manage to hit them at the exact same time, it'd be like $1.55 or something like that in June. It's very, very, very close now to a 50-50. So that value, this intersection down here that we're thinking is maybe a little low, it is a little low. That intersection is actually kind of on point because even though I like 226 better for a number of reasons, I think this is also very valid. If that's the distance that's halfway from 556, well, guys, it's not that hard because look, it already is built in. Remember this value, this 50-50 value that I've got on the screen right here, this didn't come from 556 down to 155. This 155 is just an intersection of trends, like major trends, like super important major trends, right? This is 2 humongous major trends that come down and intersect at like 155. It just so happens that the total value from the first top to the LSPY here, which we found has traditionally measured very accurately to the middle point of like an S-curve type deal, does indeed give you the correct value. And when you consider it with where you are here, and you wrap around what has now been established as like the 50%, and we know that because this is a big kind of stretch, I guess, for some. It's going to be hard to follow, but because that shift value is actually the bottom of 2020, is actually right here in terms of valuation. So that's been chosen as like a midpoint. The walk down here mathematically adds it out correctly, but then what's crazier is that that value does match. It matches it almost perfectly, if not perfectly. So the anchor that's being used right here, this anchor measures it out without us even really doing much work at all. All we did was measure the top. That's the S-curve value. Like that's the second half the value. That's the value that should be the buy back in type value, but that didn't happen back here. This was something else. This is like a partial move before you drop low. And we're starting to see how that could build out into the same thing. What's kind of crazy about this is I think that it might even be possible. It might even be possible here to actually go up high, like to like $6 and then come back down. What if that's the design? Because you guys were saying like convertible notes can be exercised at 566. So if you take that into consideration, I think that there might be a reasonable pump and dump type thing happening right here that is beyond what's expected, because there's a widening that's also taking place here and working itself out. I don't think it's very realistic that it would go that high on this move. But later on, that definitely seems possible. So when I look at it, I'm thinking to myself, that's a 50-50 back down to the bottom. It's clearly in target from the macro standpoint. There's 3 hits on the biggest possible time frame. There's 3 macro bottoms that all point towards a lower low here. If you were to continue back down again, you'd have to hit it lower. No matter when you hit it, if you go back to that level, you'd hit it again lower. And then when you look at the jump over that major creek that started on the distribution cycle in June 2021, now it's 4 years later, June. You guys are like, what? Yeah, that's June 2025. It's exactly 4 years. Down to the bottom. This matches the S-curve value. I'm not sure that speculation is the right word or theory is the right word. I think that what we're talking about here is, and look at that. That's the top of the gap, 1920. That's it. I mean, I don't know what else to say. I wish I had seen it before. I don't know why I didn't see it before, but I didn't see it before. I'm just going to leave it at that. You call it theory if you want to call it theory, but I don't think it's theory. I think that's the clear target. Because that's the measured value here in this sell-off, and then that's the shifted value right there. I mean, it is exactly where it should be. The fact that this measured value is exactly the same as this, and it's anchored on that value, which is currently representing like the bottom of this. I mean, it's just not, that's not coincidence. It just can't be. I've said that before, and you're like, yeah, but you said that before and it doesn't always work out. That's true. I have said that before. It doesn't always work out. And sometimes there's different ways of interpreting the same information. Like if I thought that was the middle, then shouldn't this be an S-curve that goes down and then goes down equal parts, and it really only comes below like 232? Well, yeah. I mean, that's totally true as well. But it's really, really hard to manufacture this target. I think if you were trying to generate a target by yourself, I don't know how you could have done this. So if it drops like as the crow flies, maybe 226 or something around there does happen, because that's still one of the extension levels here. So one of the things that we didn't really mention was that recently was that after doing the sell-off, it doesn't exactly just like hit and then keep going down. Like we're measuring those extension values as low as they can go. So the farthest one that we saw that seemed reasonable was 174, not 155 or 153. Okay. So just in case you're not clear on that, like the value that we saw that was most likely on the extension value here was 174, which is a fib extension. The 217 and the 220, and the 198, those were kind of lesser extensions. The 1618, I think, was the higher extension, is actually 174. It's feasible that if you get to the 174 level, that you could get there in May. And that does mean that, hey, maybe it's possible we don't go that late, in June. Maybe we go a little earlier. Yeah, but time is very relative. It kind of just depends on how you see the thing set up. Look at the 50-50 from 174. Instead of going down lower, going back up. This gives you a high here of the gap fill basically at 505. So if it hits the gap at 505, I think it's kind of like the same. We were talking about like 480, 485. That's that number again. 485 to 505 guarantees that if you can sell it off, that you'll walk down and you can get a full S curve, that you'll walk down to the 1618 value here. And it's slow. It would be a painful walk down, but it would basically hit at this time. No guarantees again about that, but that would be really bad. I think it would be brutally slow probably, especially in like the middle area here. And that's assuming that it does walk down, but like that's not really out of the realm of possibility anyways, The reaction after that presumably would be just up. But I would be curious to see if we do kind of come back up and what happens when we get back to the floor at like 236. We probably would. Because the rest of this doesn't work. Because then the next possible iteration would have to be like a push above the previous top. It basically is exactly like what it looks like here. Each one of these pushes up slightly above the previous top by like a very mild extension. It happened 1, 2, 3 times. So this time would be no different. It would push above. Like I'm talking about like back here. These guys walked up slowly, slowly, slowly. So the next time it happens, you'd be going all the way back up. This is essentially like the SOS move right here. SOS move, SOS move, SOS move. So the next time it goes back up, it would be walking up along the creek, but it'd be a steeper creek because each of these is getting steeper as it goes. So the first one's like here, right? It lays back on top of it. Second one's going to be like here. Yeesh. And it'll lay back on top of it. And then the last one will be like really steep, like here. So as it goes, it would get more and more extreme, as you would expect. So the last one, there could be a final one that's not quite what it seems like. It could be like that layup that drops a little bit lower. There could be one here. I don't know. That's a question that I just can't answer. There could be one more that drops it down even more. But it doesn't really matter because the final outworking would be it has to come back up higher than the previous, and it lays up by a certain percentage, and it would be coming back above 556. And before you cry foul, you got to remember like that particular measurement, whether it hits 174 or it hits 159, that particular measurement is it's kind of irrelevant because the move up still has the 50-50 swing around the same spot. It's like negligible. Again, it's very, very small difference. The reason that I'm favoring the other one is because A, it's a measurement taken from before the stock split. So it's a really solid measure of that move. B, it's shifted with it. It's clearly like shifting from the value there. It's in the right spot. Yeah. So you're saying we're not going to even come above $20, Booksy? Well, I don't think these are the same move. So like there's two different moves here. So one is a push back up to the top. The other is potentially like a second breakout move. So the first push was always going to be, if it got up here, would always be like somewhere between 13 and 20. We already knew that. So what's the question is going to be is, does it push this particular top? If this raises the bar a little bit, and it might, depending on when it happens. If it happens in May or June, yeah, it's likely going to push over the top based on these measurements, because it can't, after you get past April, anytime you come back up to 1923 or 1921 area, you're now going above that creek. So you're pushing the resistance. Okay. That's like what happened in this particular instance as well, right? You're pushing the resistance and then you're backing up to a creek and then you're doing a reaccumulation. I imagine that it's going to be much the same way, that this would push up above. That's like the first move. And then this goes back below here. This is the second wall. So in the reality of the chart is that this level at 13 did become our new, I mean, that is the level now, right? So this is like this is more about the theory of the first, this 556 is more about the theory of the valuation chart. This would be where that actual buyback up has to kind of reaccumulate and then potentially go again. And so that's where I think the second maybe part of this cyclical nature might come into play. And I'm thinking that we're not wrong about some of these ideas about how long things take. And so what I would do is I would make a measurement from when this began underneath it, because that's also the way I would do it in 2020. Unless we're wrong about it being like a perfect 2-year cycle. Kind of suggests that May is going to rocket and then it's going to reaccumulate and go again. So what's all this other business you were worried about? I'm worried that if it doesn't go high enough here, like it technically could iterate again. So there's a concern that I have that, like, yeah, this is plenty. In fact, the way this is set up, I think the way this is set up, I may have like doodled sort of on top of doodles here what might occur, but this could hit like 160 and then react back to this value and leave from the top. It could get both of those before this date. This is just like an intersection, right? So technically, like, it could get to 159 and 174, and that could be like the final build out. We don't really know, exactly what it's going to look like just yet. So if that happens, it just goes, right? And the reason that's important is because that timeline of the move, the 2-year mark, is significant because the wave itself on the lower end, just the lower wave, is like a 2-year potential wave. It started in August on like the 25th, but when we went back and we looked, we really suggested that might not be super accurate. Might be more like the 11th. So either way, the 11th through the 25th would be where those two are most likely going to be, one of those 2 dates. That's August. So I'm talking about later on, right? So August 11th, roughly. That's just a Monday. And then the 25th, which is also a Monday, which makes sense because I think those were the 2 dates. Those would be the most likely times that you would have like a second breakout, like where it breaks above 13 again, because it would do it once and then it would do it again later after a backup. So there's really only 2 time periods then that you would suggest that this is likely to happen based on the inner wave. And this works out, this tracks. There's 2 dates. One is June 3rd. That sounds about right. So June run up for the and the other is June 17th. So that would represent where it first kind of touches this, and then the rest of it's kind of history. So this could have like a serious melt up from like May 24th or something. I mean, it could be really fast, like a week or two, which sounds about right anyways. That's the correct measurement. I think that's right. And then it goes up. So basically you have like a melt up from 174 where it finds support at long last. And the people that are like, oh, it's just like 2020, they're going to be like, it's just like the bottom now. And then it will be, right? But there's also this element of like layers here, which is that we didn't actually mess with this in reality because the values were shifted. So this has a big retracement back to probably the middle. It could come even lower. Technically, I think we had a 786 retracement in 2000 and or something like that, or 618 or something like that. It could come pretty low, but basically it comes back down and tests this creek, which we'll have. We already have it, but we'll have it even wider right here. If this pushes up the creek a little bit, then it'll be like a wider creek and it'll be right there. So this would be like here. Because it'll, if this advances to where we think it advances, which is about 5, this places this significantly higher as a creek goes. So now we've got a perfect place for later to jump and then come back, intercept, whatever. The next two levels are 1350 and 1255, and that's the reaccumulation phase. And yeah, that's pretty much all she wrote. And this all could shift over by about a week. But this is pretty accurate, I think, because when you get to this point, the last stage here, and this is what I'm worried about, because I'm worried that like if we get there too soon, it doesn't actually jump the creek. It just kind of sets up right beneath it. I mean, I'm not really sure exactly how to work that out, but I guess we'll find out when we find out if it does happen. So this would be logical, and it would only take about that long because that's the entry. The entry didn't take very long. It's shorter than expected. It's shorter than the 2021. It's right here, and then the little leg at the end. So yeah, I mean, it could shift over like a smidge, and that's possible that all of this shifts over by about a week. But I think that's pretty accurate. I do. And then it's made that advancement. So it hits like close to the gap at like 19 up to 1927, right? SOS happens at the top here. Now it's trading back in the previous range. But the second markup, which I think, again, is likely going to happen before February of 2026. And I've made a lot of comments about that in the past, that could actually be the breakdown level, which seems likely. That you're going to do something like what happened over here, but right up there. That this moves again, and it only goes up to like the 50-60 mark. This is where it makes the most sense to me. And that's where we finally see the, and we've kind of done this a couple different ways at a couple different times. But this is where we finally see like the final bit of the markup here. So the reason that that's offset is because this is where the wave breakdown took place. So it's complicated in some ways, but in other ways it's not. You just take that value and you drag it to the top of the gap at 1960, and that's really where the termination of that bigger wave is. That's it. That's the measurement out for, and I'm starting to think it only gets to 42. Maybe that was the reason that was triangulated, because it looks like it's right there. So now it's only going to get to 45. Yeah, maybe. The rest of it, I think, I don't know, man. I think we could probably debate it from there because really that's kind of low. And if you use the double wave here, it actually looks like it should go all the way to 105. But this is the kicker, isn't it? It's like everything's adding up really well, except for that last bit. You don't really have any assurances there. It's technically, if that's the 50% again, then it should go up to like near 99, which is closer to the first targets that I got. But it ignores the shift value that happened, so I'm not sure. I'm just not sure. So somewhere between, you guys are like, those are hugely different numbers, Booksy. I know they're hugely different numbers. There might be a reason why maybe we find other evidences, but I'm guessing these are the same levels we've already found. Yeah, this is the original opening value of the chart right here. So this is back, even though $100 sounds like a lot, really, I think a lot of the math is based on that, and that's where it is. So I mean, look at that and tell me that looks completely wrong. I don't think it does. I think that when you look at the grand scheme of things as a wave, that looks pretty right. Now, the 2026 bit, you might say, well, what makes you think it's got to break out that quickly? What if it takes longer to break out, Booksy? What if it's not a 2-year cycle? Well, things can change, right? One of the thoughts I had is that this is kind of slow moving down. It could be slow moving out. Another thought I have right here is pretty obvious, is that if you look at where the SOS is, technically, like, to me, it kind of looks like it's not supposed to break until like November. If I put this SOS in a more reasonable place, I would put it on top of the mark, not below it. And that doesn't happen until way over here, near October. So there is a possibility that we're kind of giving ourselves too much credit with the speed of this. And it may be that this doesn't, I mean, it just seems possible to me that this is actually longer winded and doesn't break out until October, which would be more closely related to that February 2026 finish. What's the obsession with 2026? If you forgot, it's just where the middle is on this wave. So it's not complex, pretty straightforward. Measuring out to here to the middle. We've done it a few different times, a few different ways, but it always comes up to basically the same. If you look where that cat ear is right there, that intersection is right there at March, and you can see that the ending result is in February 2026. Seems pretty logical. That's the center mark. Up, down, up again. You wouldn't expect to be necessarily at the top until then. But we know that the way this moves is maybe a bit tricky because, it's not perfect in the nature of the waves. Waves are weird. They're not always like this peak doesn't represent the top of the wave sometimes because it's really more of an average move. So it kind of just depends on, I guess, the way you look at it. This one person is going to say, if you did something like this, one person, different folks, different strokes, I guess. One person would suggest that this is probably bound for the top sooner than later, that this should hit the top here in July because of the angle of ascension back here, and it's going to be the same, yada, yada, yada. I don't know, maybe. But another person might suggest that, no, I think the bigger wave is more important. And then ultimately, like, this is like the middle. So these two push downs are actually just circumnavigating like the bottom of a bigger wave. And I think that's more likely. Like that's not really the definite bottom per se. That this is essentially like the middle of the wave is kind of in between all this stuff here. It's not really on either point. thinking, yeah, May or June right now, but I wouldn't be putting out, I personally wouldn't be getting a bunch of calls or something for May or June. I'd probably go 6 months out from that. If you think it's going to be up at $20 in May, if you want to get calls, I would probably do it January. Just the $20 strike, for example, if they even have that. So that would be odd to me. So I think what's more likely here is this is a push up with the sell down. It's getting you to this level, which is a 50-50 around 556. Then you're going to break out somewhere between probably mid-May and mid-June, because again, I don't think there's much negotiation in terms of distance here, but I think there's possibility that this goes on longer. I mean, in theory, could this go all the way down to $1 and then break out and go from $1 to 13 to 100? I guess. If you're just looking at big moves, sure. But I think it's more likely that it does it here. So it's measuring it out. This is going to be a push of the creek. I'm not really sure about this second point. I think there's a complication in that. So if you're very literal about it, it shouldn't hit it until February. $100 or whatever in February. But I don't know if it's wise to be like hyper literal about a wave. I mean, it could be there before then and be chopping along by the time we get to that point. It really doesn't make a huge difference. So, because if I use that as an example, instead of using like the top, let's say I use November over here and use the bottom here. I mean, that kind of gives you a different perspective, doesn't it? It's like, oh, that's over here in like 2020, early 2026, like January, right? So that's not hitting those levels till then. So it's a little odd. So I'm not sure what to make of this wave other than I know it measures out to February 2026. That's all I could say. So what I've said to people is like by that point, it would probably be around there. It could be a few months before, like 3 or 4 months before. It could be right on that date. There's really no way to know. But one thing I would say with relative certainty is I don't think after that point in time you'd want to be in the trade, because I think at this stage of the venture, it's not really possible to know. Wow, look at that. It's not really possible to know exactly what comes next. See, this is favoring a late breakout. Look at the difference between the two markers there. That's a 50% marker coming down. I just put it right up underneath the breakout in June. What if this doesn't like melt up like we think it is going to melt up? What if it's a little bit more gradual? Kind of did this before and I never really got like a strong answer. I mean, that kind of works. This one, not as much. But maybe it just hasn't happened yet, and that's why it's not working yet. That would be something completely different. I think that would really irritate people. I mean, May is kind of where I have going up, but January, that's way out here. I don't think so. I know why you would say that, but he's probably looking at option stuff, so I don't know. I gotta wonder if what if our expectations might be like way off about this. We might be thinking this is gonna be like this kind of one-off move, and I want to say yeah, it's likely, but who knows? The angle of ascent here is kind of interesting. It makes me think that even though this is very fast at the end, I have to take into consideration that the rest of it was actually kind of slow. So this time period is not long, which is great if you're looking at this like, oh, it's going to be 2 years, and then that's the inner time period to be up there by then. Yeah, but at the same time, like it's more likely, I would suggest, that the SOS is over here in October because of the fact that it's on top of that move. I find it a bit odd that it's below it here. I mean, I could be wrong. It's in the right spot, but this looks okay to me as a possibility. And I think that happened in 2020, that roundup. I want to say that that was the angle, but I can double check real quick. No, that kind of cuts through it. It leaves it behind. There's really no good way to do this because I think the angle is actually that angle, and I think that that's not true in our time frame. It just doesn't really add up. So there's no real problem here. It's more about there's no real issue. It's more just about not knowing really how long this takes. And I guess based on the way this is set up, I almost think that it would probably not break out until October, which is a weird time, but you guys are like, oh, just wait till January. Yeah, I don't know. Maybe what we should use instead is, instead of this inward measurement, is just use what the measurement was back here. Still not that long, because this was only like, it was like nothing. It was like 100 days. It is longer than this period, so I guess there's that. The 100-day window takes you to September 2025, and this is in August, September 6th. This stinks. Yeah, I don't know. I would have placed it jumping these creeks, but maybe we'll find out that this goes higher. That could change it. I would have had it jumping the creeks at the same time it does the SOS. So it doesn't really make sense to me to do an SOS beneath them because it's not going to be very strong looking. And there's not really much negotiating in terms of where that is. This is the marker for the 50% on that move. So it would be much more logical to be beneath it or to be above it. But that certainly means that it would take till maybe November. Now we're talking about the same thing, the January move, right? Because it's like, yeah, it would take that long. It'd be over here. And it'd have to be in like November to really jump it in that timing. So it's hard to say. I think we'll get a better idea if and when this happens once we're up here, because you'd be able to see it take place, this does suggest that there's not likely going to be a move till here, because it doesn't leave. There's just not enough space. Like you could jump it early, but I don't feel like that's going to happen. I think they're going to use it again, same way they did the first time. So yeah, so that would suggest maybe late 2025, more like a Santa rally. And I know that that's 2 months off from January, but that would put you up at 100. I think it'll be a 19 by its summer. But I think we're going to have some pain in the second quarter area. I don't think it's going to be easy for us. So we learned some stuff today. We learned that, as best as we can tell, 556 is probably the middle. We learned that the buy-in or the sell-in with the shorts covering kind of business, all of that is not yet happened. And I think it's probably not going to happen until you get low enough. And I think that the shift value means that it's probably going to come down to 150s or 170 to 150 to 170 before it goes, which is low, but it mathematically has worked pretty well because the extension on these iterations is now building a final extension that goes right there. So if it does push up, the 786 retrace comes back to basically where the gap fill is. That lines up with some other things that we saw as well. So it's essentially like the bottom of the gap. And I think after that point, it's likely going to break back down. I don't think it's very likely going to hold here, which is probably what a lot of bulls are thinking. Like this is a terminal spring, but I don't think it is. I think it has one more gear down. And that makes sense for a lot of reasons because of liquidity. We left a lot of stuff behind. There's no guarantees about how low it hits. It could end up being we were right the first time and it's like 226 and it takes off or whatever. But what we would look for is we'd look for a rebound. So this is probably going to feel like a terminal shakeout at the very end. Like it would come across as kind of weak till about May and then more than likely dump and recover in a very like dramatic fashion going into mid-May to June, because that's where you'd have some kind of a buyback in and you'd end up with a pretty succinct push out, I think. And you'd have to come back above the floor. You can't just it has to be obvious, right? For everybody involved, the other operators, that they're going to go. And I'm thinking it may be kind of late, but it's whatever. Technically, this doesn't even intersect until June 24th, but I'm imagining right now, based on the way this is set up, that it's more likely. I think it's more likely that this actually goes up into June, as it were. Again, maybe it's kind of like the 2021 move where it's June 6th or whatever, but the run up itself starts low and then builds out. That actually is the perfect measurement. That's the same as the measurement it's a 50-50 around 556, which is great, back to the gap value at 1960, but it's also the exact same measurement as the initial walk down from the June top down to the LSPY, which is very significant because that's like the first half of the S curve. That would be the reactive move that you would expect after you hit a bottom. If we already hit the bottom, then you'd expect it to go way higher to like 27. But I think that this particular sell-in here was really just designed to mark off the top levels again. And then it does the same thing here, but it does it in a weird spot for us because we're not really sure why it's doing that. But I think valuation chart really explains why that is, because the valuation chart's like, nope, that's actually like sitting right underneath the previous floor, which is where they've been doing those offerings as well as they come up right underneath that floor, right at that floor previous, weirdly, right? But that's where the liquidity is. And so the shelf is anyways. And then they go back and you look at this from that point of view. I think a lot of this other stuff just kind of falls into place. I don't really think there's much else to, harp about. We could go on and on about how long this maybe takes or this and that and the other, but reality is that things tend to go longer than expected anyways. So there should be no doubt that this could take quite a while. And I think it's reasonable to conclude that it may not budge until late part of the year, it's like 5 or 6 months apart. I do think it's very possible you have a pretty early drop, sell down, maybe back to at least the 550s. And then it takes time to come back up, yada, yada, yada. And the way this is set up, you could make an argument that it doesn't go until January, because you could say that maybe the final bits of this, are very last minute. Everything here is like fairly meticulously placed at this point. So if you wanted to like hit this at the last second, like in October, could you hit this in October and then have like a sell down period going into January, right? And then have like a buy up here that comes above an SOS's? Like, sure you could. So I wouldn't put it past this idea that it's like January again and then it goes. It's just that earliest crossing could be as early as November. I think that makes sense. Then it's the second part of the move, and preliminary target here is fairly straightforward. The first is the gap fill. It measures out right for a few reasons, but then also there's a question of like continuity with the larger picture, and I think that it's just a mixed bag. I mean, I could definitely see us going up to I could definitely see us going up by February 2026. And I don't know Roaring Kitty, I don't know the guy at all, but if he legitimately says that hey, I think it's going to go up January 2026, I just want to say that that's really cool, but I also got there first. I got there a long time ago, like a year ago, because I was talking about February 2026 as the upside year. So I'm happy if he's thinking that's right. That's cool. Something else is falling into place. It's always good to see a second opinion that's maybe even more valid than your own, right? But yeah, that makes sense. So a whole year of downside again. Where are you seeing that? Dude, you just kind of see whatever you want to see. Good Lord. You mean like this whole year, 2025? We're talking about May going up. Dude, you just hear what you want to hear, man. Oh my gosh. You drive me crazy, dude. Nobody said it's not moving up until January. We said that it's a two-parter, and right now it's setting up, to go lower, but there's probably another buy-in. And I'm happy for you if you got rid of AMC in that position. But selling low is not something to come brag about on a YouTube channel either. You're just saying that you got out. I'm happy for you. And I don't know what to tell you. I'm really not trying to be a jerk to you, but you kind of leave me in that position so much. Because you just don't want to like listen to reason sometimes. You're just very negative. Anyways, this whole setup hasn't confirmed a breakout, so I don't know. You shouldn't be like buying in like crazy anyways. I do think we're likely going to head back up. It's time to distribute again. We're going to head back up to 430s. We're going to head back down, probably hit new lows. Then we're going to rock it. And then at that point, who knows? It could take a while. I'm not myself looking for anything right now, leaps wise. I wouldn't be looking until after this move and it goes down. And then I'd be loading up the boat. All right, I'm done with AMC. I didn't leave a lot of room here at the end because I gotta go, and I'm really sorry, guys. I really closely watched NNOX. I don't really want to talk about this one too much, but yeah, we're not gonna stay. In my opinion, we're not gonna stay at. I mean, it could be before the earnings, it could be right on the earnings, but I think what's likely is we're going to run up into earnings. I think we're going to have about 2 weeks here, a week and a half or so of upside. I think we're going to drop after earnings. I don't know why you would run up after. Maybe it'd be in the middle or something, and then it does a last push. I don't know, but I think it'll be a positive earnings. I don't think earnings is going to be a positive catalyst, though, regardless of if it's positive. So, like, what I mean is, like, as an earnings, I think it'll probably be good. It'll be like a double beat or something, but we'll still dump because that's the way the market is. So it would make more sense if it's planning to beat to go ahead and, like, pump it up and, like, price it in and then have it dump down again. And who knows, maybe there'll be another offering. But I'd be really surprised, not really surprised. I guess I'd be moderately surprised if we just sat here because this downtrend's pretty rough. And I think that once you break it, if we break it by Monday, which we're kind of gearing up to possibly do, then we should just take off. Melt back up to the level we're going to melt up at. Just start be covering of shorts and short positions. But I mean, there's no I'm not sitting here saying, like, it's definitely going to do this. Like, I don't. We may have some kind of a weak double push and then not really go very far until earnings. And then on earnings, we have a final pop. That's kind of what I was talking about before is, like, the nature of it as a distribution is kind of whatever. There's a lot of things that could happen. I think if we hold... because I do think its distribution was going up here. But, like, I think if we do hold right now above 308, we will have seen a change. We're kind of dancing on the creek right now. So a little push up followed by a drop going into Monday. I think you're probably just going to take off Monday. If it dumps below it again, then we may have to wait longer. And I also wonder if it does like a head fake to 325 and come back down, we might form like a bigger range. So I have it really, really light here, but I can make it a little heavier for you. It's possible that it could get topped off and come back down one more time before earnings. And then we don't leave until then, right? But I don't know why we would wait that long. I mean, that's just me. I got March 7th, because I bought March 7th, that's why. I've got March 7th for my call options, but I mean, it is what it is. We'll see what happens, how it shakes out. I think we're going to be up there before the month of March, and then we'll be distributing. That's my thought. And then I think we're going to sell off towards the end of March and start heading back down. I made a case for this a long time ago because March to March was the quarter to quarter. And if you look at Q2, that's a very popular time. This was also propped up into earnings, which was last February. And it started going on like February 7th, which is a Wednesday. For us, that's tomorrow. So it's more likely Monday. It props itself up into earnings and then dumps after. But March, if you look at that number, numerically, that number in March here is right around $4.26. And that's right where this is. It's like the same pocket for March. I made a case for that like a few months ago. I talked about how maybe it's coming back up for the... I got 450 strikes, but I'm overshooting it. I don't know if it's going to get to 450 Could hit 490, could hit 5, but I'm just thinking like at minimum it's going to hit 4. So I'm overshooting it. So I'm going to play volatility. But I think that that cycle year to year makes sense to me, that we're approaching it again on the opposite side. We did that in 2000 and to some degree in 2020 as well, where we kind of hit the same time period from the opposite side in like a cycle and then dropped low. So we'll see. There's no guarantees here. This could very well become a terminal spring if it holds above here, in which case I'm just going to buy in. But I don't think that's as likely. So I think it's likely going to be distributive. Anyways, so yeah, that's where I'm at. NNOX is one I've been following. I'm just waiting to see if it holds the support right here above 734. If it does, maybe this isn't like doomed. Right now, I think there's a possibility that it could just distribute and go really far down. It can go as low as like $6. So it could end up being kind of a bad trade if that happens. Obviously, I don't want that to happen. But in order for this to mark back out, and it already did the first part, I marked it off yesterday, it has to come back up, hold here, or at least above 735, and then push out again. I think if it can do that, you're going to see a pretty massive move all the way up to like near the gap, and then probably it's going to come up to like 870. After that point in time, really not sure. You know, I had thought that this would break and maybe go all the way up to 12 and then maybe 14, but this is such a mixed group of signals. It's looking better and better every day because it got really oversold really quick. And there's obviously some significant divergence here on the 1 hour. As you can see, like that downward push on NNOX has been met by a upward move here, which is now starting to break out. So it certainly looks like a decent setup, but I also thought that before, and then it ended up breaking down. So mixed bag. It could be a cat ear setting up to drop again. It could be a, you know, number of things. Could dump from here and go down and create a wedge. I mean, there's so many things right now. So I'm really just focusing on the levels and it holding above 750. Oh, AMD. I'm surprised nobody asked me about AMD. I'm happy to see that it's holding up now back inside this trend. It's still below the floor that it was on 113. What happened to AMD? So let me put it this way, okay? I look for opportunity when I think that something is like overdone. When people were saying Apple was like really bad, they had been lowering targets and all that crap. I looked at the chart and I said it looked pretty good. And it really didn't look to me like Apple was ready to fall off the face of a cliff. Even though there was possibility that it could come lower, the setup itself looked pretty solid. Apple took off. It remained very strong. After earnings, they all freaked out and adjusted their analytics because they actually beat really well and all this other junk, okay? Sometimes the market does things based on fear, and it's really not justifiable. And I honestly feel that this is the case with AMD. So first of all, I was in an AMD strike for two different reasons, okay? There's a huge amount of evidence that suggests this could come up to 127 to 128. Huge amount of evidence, okay? It also broke like a local creek going into earnings. I would not have expected it to dump 10%, right? There is a long-term reason why this technically came down. So I said at first, like, there's no reason to be down here. And then I said, well, actually, ... there actually is, because this is a very macro creek for AMD. I'm talking about the processors. This is a huge creek retracement, right? From like way back in 2021. So this hasn't been checked like ever. Arguably, you could say that when it came up here and dipped down low, that it had been tested. This was a sign of weakness right here. right? When it pushed low. The target for that sign of weakness was not all the way down to this creek. It really wasn't. And I think that's what kind of threw me off about it, because it's like, well, really, it kind of just got there. And it did. You can see that right before earnings, it hits that SOW line, and that's it. It's got it in the bag, right? It's right here. It bonks its head on it. It bounces off. It's going to approach the creek and potentially break out. Instead, what happened is that they double beat on earnings. The market, in what can only be seen as like just a panic-filled sell-off, has the highest volume on the hourly since like October 2023. So it's like 2.5 years or whatever, 1.5 years, whatever it is. And the market sells it off like crazy in extended hours. And I mean like crazy. I mean like the worst of the worst kind of thing. And I was watching it and I'm like, okay, so why, right? In this particular moment, is it selling off? And it had pumped up, and this ticked me off as it should, right? It pumps up and it goes all the way up to 126, which was my target. I literally had this on the chart, guys, this marker here. And I was like, seriously? It came right up to my marker and then dumps. And I'm like, well, great. I'm glad I didn't get to participate in that. Of course. It goes down 9.5%, 10%. And here's why. Because AMD is a processing competitor to NVIDIA. They make chips. They make all kinds of stuff surrounding, chip processing. It's largely been seen as like the cheaper alternative. So if you're a gaming guy and you have like a gaming computer, AMD is often thought of as like the cheaper alternative usually. And it's got a lot of good business with different contracts and all kinds of stuff. This is not a bad company. And I think there's something about the way that it was spun in the news that makes it seem like AMD is doomed for failure. Like they're never going to be able to compete with NVIDIA again. But the problem with that is it's not taking NVIDIA on its own merits alone. It's just looking at it compared to what's going on with AI. And AMD processors is in my opinion, it's like a little sleeping giant, okay? And I mean a little giant, but it's sleeping. That it's not going to ever be, in my opinion, NVIDIA level. I don't think it should be. It's not, the metrics don't support that, right? But it's not a bad company. In fact, during their earnings, they actually posted a double beat, which was unexpected. And then in addition to that, because of the double beat, people were looking at the new, like, whatever they called it, where they're going to be servicing AI and stuff like that. The reason that it dumped is because the CEO, decided not to give any guidance for their AI business. She just said something like 10 million plus in revenue over the next few years, right? Well, they were blaming the data center revenue because they said the data center revenue missed by like 2 billion or something. Which again, we can talk about little bits and pieces here and there. So they're like, oh, the revenue beat, right, for the whole company, but the data center revenue missed. What didn't make headlines is that data center revenue was up it was like almost 70% year over year. So it was like, yeah, they missed projections, but they made a historic high in data center revenue. So think about it. Like, it's like Wall Street expects A and they don't give you A, they give you B, but B is way better than the previous year. Like a 67% or 69% increase year over year. That's a big increase in revenue for the data center. But because it missed their expectations, they're like, well, it's garbage. And because they didn't talk about AI enough, they see it as it's not going to compete anymore. It's no longer going to be able to compete with NVIDIA. Okay? Is that true? It might be true. But the thing is that I went back and I looked at adjusted. No one has changed their targets. Nobody went after that meeting and said, oh, it's suddenly worth way less. It was already kind of like baked into analyst targets, and most analysts agree that it should be between 130 and 150, and right now it's just undervalued. So I made a choice to go ahead and buy the dip because I don't think this reaction is warranted. I think it's ridiculous. I actually think it's a whole bunch of BS, to be honest. I think it's a fabricated sell-off to kind of drive the price low as they can and go back and check this historic liquidity level. From a grandiose technical perspective, 110 needs to hold. If 110 holds, then there's definitely a good chance that this thing is going to keep moving and advance back above 114, and before you know it, it's going to be pretty high. Weirdly enough, the widening spread that was happening on the it's very strange on the after hours price action that occurred as a result of this earnings whatever. There's a widening spread that's being built out here that actually would suggest that the next target is like the 150s on the widening spread. It might be a little hard to kind of see it because my chart's kind of always messed up. And I don't even know if I drew it right here, but there's a widening going on presently. And it would suggest that the double flush value, right, if you kind of add those back into it, as long as it can get above and hold these supports again, as soon as it comes back above like 120, it should be going all the way back up to near like 130, potentially higher. And that's where the 4-hour EMA is. So I don't think this is a bad play. I think it's just a confused play. I'm not particularly happy that it dumped. I'm not particularly happy to hear the arguments about why it dumped. I think it's just silly. Guidance on AI is something that a lot of companies have decided not to do anyways, but they got docked for it because they're not seen as being heavily enough in competition with NVIDIA, which they've always been kind of the second seat. Now, if they were talking about AMD versus somebody else, I'm like, okay, that's a better argument. But like everybody compares every chip manufacturer to NVIDIA, and I'm like, who gives a crap? Who cares? It's not NVIDIA. Like, I get that. It's not going to ever be NVIDIA levels more than likely unless something huge happens. I get that. But there's no real reason to kind of sit there and be like, oh, it should be dumped down 10% and get out of my position because of this and this and this. So naturally, like the day that it opened, there's a huge amount of buy-in, huge amount of volume off this bottom. And as long as it holds, it's going to go back up. So I'm still in options on it. I'm not faltering on it. I got them far enough out. I'm not really worried about it. I still think it's a good buy. And I think right now you're getting it at a discount. Like they lost an incredible amount of value overnight, and then they regained like a huge amount of value during that first day. So it was just a discounted buy, in my opinion. And if you had swing trade it, you would have swung up like 30-40% just on that day if you just bought at the open. And I did, but I didn't swing out of them, right? This is another one that's kind of like AMC. There's a chance that this doesn't ever go low again. So if this continues to make higher highs and higher lows and it doesn't get hung up, MPW up here kind of in the same pocket around 530 down to 486, which is sort of the same area we're talking about with AMC. If it can make a jump here and then hold that as support, it's outside the macro creek. It should just go. Because that big one coming down is a multi-year widening that's got massive volume on the bottom. So it's not exactly like rocket science. If it can hold this and then jump above, it's probably going to just go. It seems unlikely that it would take off as high as 630 and then drop again. But that being said, earnings is coming up as well on the 20th. Who knows? They may just rug pull at earnings or vice versa. It's not been doing well at earnings, even though this company has an immense amount of potential, and it technically still is like one of the biggest REITs in the world for medical properties. It's huge. If you look at their like rap sheet. It's not been doing well because of tenant issues. They've corrected those tenant issues, and now they're kind of like dealing with other things, yada yada yada. I still think, just like AMC, it's possible that this could have that drop down and come low again. But, in reality, if I were just looking at this as like it's kind of straightforward. It's like this could be the creek jump, which would be like an SOS with a backup and then go. Or this would be like a failed to jump and then drop down for a spring. It's really simple. So I'm just kind of waiting on it. Bigger time frames, there's plenty of room to move up. Smaller time frames, it's looking really overbought already. So, I mean, it's technically like kind of meh. It looks like it's chilling out, but it's got like a rising triangle. So maybe it'll like break out again and have another push up. So like 568. That's sort of what I was imagining, was it hadn't quite gotten there yet. So I have it coming up to like 550. And then we'll see. I don't know. We'll see. Wolf speed. Well, Wolf did the thing that I didn't think it was going to do, which is it went sideways. And I'll be honest, I can't really put my finger on this one right now. I know the waves are there, but I just feel like it keeps doing the same thing where it's like it jumps across a wave and then it creates a weakness, jumps across a wave and creates a weakness. It's been pretty much nonstop. Wave jump, weakness, wave jump, weakness. And then if you look at the big picture, it's like, well, now it looks like a 1, 2, 3, 4, and it hasn't yet jumped over. So it's not looking awesome. I still think it would benefit. I think it would benefit it greatly to go ahead and get that downward move and just hit that bottom and then go. Like, I don't see why it's waiting so long, and it's doing this weird like walk down thing that's just kind of ugly. And to me, I think it's overdue. I think it just needs to drop. I hate to say it, but I feel that way pretty strongly about it. It keeps faking people out like it's going to go, but it's really not because the company's bad. It's not because it's not worth a lot. And it's not because I'm bearish. Long term, I'm not. I just think that this setup looks kind of bearish, and it's done nothing but show kind of bear side. It's just holding up so well because of the immense amount of volume. I'm not going to sit here and go too crazy, but I will say that the confirmation's still the same. It's like 680. Until it gets up above here, I don't think it's a buy. I'm not feeling it, It looks like a flag, so I guess it's got that going for it. That might be the argument that bulls make right now, is like, oh, it's bear flagging or whatever, bull flagging, and it's going to just rocket. Yeah, but the markdowns here have been very distributive, like in nature. They're not doing things in a way that accumulation would typically work. So I think that you have to just kind of take it for what it is and move forward. I'm not particularly confident this is going to hold up very much longer. Yeah. And it's bizarre. There's a lot of volume on the bottoms, which is positive, but aside from that, I don't know. It just looks like it's trying to pin it beneath 612, which has been in contention this whole time. I guess if it jumped over that, I might be inclined to think it's bullish, but at this point, who knows? So I'm just waiting on it. NU, man, just keeps going. It's just not stopping. I don't know. People like this stock, I guess. When it buy it up, they buy it up. So it's just had a really weird, long rally to the upside. It's hard for me to say, yeah, you should buy it, because it's already been overbought for a while on daily. Until this crosses down, which by that point it's a little late, but until this RSI on the daily crosses down beneath the moving average, I think it's pretty safe as an upside move. But, grand scheme of things, is it overbought? Yeah. So Diamondback is one that I invested in, and I sold out some of my position up here when it did this, I figured it was probably done. And part of the thing that bugged me about Diamondback was like I thought it had already come low enough, but when it did this morning dip on February 4th, that's a weakness as well. Like you can't really take those things for granted. If it's coming below the previous floor after what seems to be a strong reaction, all right, there's some desire to come low to 160 to trade, and now we're down at 160. There's a heavy amount of volume here going into this bottom. I don't know. Maybe it'll continue, maybe not. At this point, I think it's well below the 618. So if you're doing a retracement, you'd probably be looking at like the 786. I think it started dropping below the 618 at that floor. So unfortunately, kind of showed some weakness here. It did not react well, and it's not impossible that this could go up again, but right now it's looking very much like a sell down, maybe back to 150, which is pretty low. And then we'll see. I still think that this area at 170 to 173 around a week from now looks like a pivot, but it's a pivot, right? So it could be that that's at the bottom of like a wave, right? And that's where the actual breakout happens. Like this could go sideways and then break out over here. It could be that that is indeed a reactive move to a top, but it's very triangulated. There's a lot going on right into that point. So I think it's going to be used as an anchor for a pivot and or for a target. And that's about as far as I could take that for now. So it wouldn't be overly concerned by anything that's happening. Just kind of like pointing out that there's a bit more downside, a bit early here on this setup. And it could very well be that this needs to come back to the 157 area before anything else happens. So we're going to kind of watch and see. And I think there's a double bottom on a longer trend down here as well. So it would be strong. And then after that, yeah, I think it's time to come back up, move about your business, so on and so forth. I'm not going to bore you guys with too much FANG. But I'm going to let you know because I did enter a position and I traded one part of that positively. The rest of it, we're going to have to kind of wait and see what happens. I'm a little bit early. This is still looking like it's pushing back up to me. So I think it's just waiting for that big break. I feel like it's right there. Yeah, hard to say. There's a propensity towards this to keep selling off pretty far down, and this is starting to look like it's about to become oversold on the 4 hour. It's really close to this trend, which is definitely a divergent trend. I think if it hits that mark and reacts strongly, it's probably just going to take off like really far. Potentially. So that was kind of the main ones. I haven't looked at much else this past week. I was looking at WTO a little bit, but it's really more of the same for that one. It's just kind of choppy. Yeah, it's still at 27. So I'm not a big fan of WTO, but I guess if you're in it, you're in it, you know. I've still got a small position, but I never had like a large position in it. And so we mentioned this was kind of the make or break level here. And if you start going below that, you're really at risk of just kind of fall out. And you can see why this is like having some difficulty. It failed to break multiple times. The cross up didn't happen right here. So the risk on entry wasn't even really there to begin with. It never jumped back over. Could be a shallow S-curve, yeah, but this also could just be like an LSPY chopping up. Well, how do you know? If it jumps the creek and then it advances back up, then it's going to be the same entry point at like 31 cents. And at this point, there's a lot of reasons to suspect that even if it did go up, it may not come above this 36, just like we talked about over here. There's definitely like a pocket of potential reversal if it does explode. So it could be a wave that you could ride here that might be really positive. I think it's a 28% move. So it's not like the move itself is bad. It's there. It might happen, but it doesn't necessarily have to go much further than that. And I'd be a little bit concerned if it came above 33 and then broke back beneath it. I think you'd be done after that. So what about everything else? Well, there really wasn't anything else to triangulate. Excuse me, on this one. I think when we did it, it really was kind of done. I had the triangulations from the past. Everything else was just kind of waves up. They're not really hitting anything particularly all at once. It's just kind of there. So these would have been, if this had broken out, 1, 1, 1, 1, but that didn't happen. So this is the only intersection we had, which was on the 29th of January, and it's right on that cat ear kind of breakdown. So if that's a pivot, that's fine. Maybe it's a pivot, changes the direction of stock, but that doesn't mean you can't make lower lows in the meantime. You know, big picture wise, that could mean a number of things, as we very well know. So this could be, yeah, a pivot that eventually signals maybe you're going to come back up, but it may not happen until way later in the year. And that's if it happens. This could also just be a pivot that's a potential for a bottom that could still turn into a, you know, an S-curve. So I have to be very cautious with stuff like this because these penny stocks are pretty volatile. Jason, I don't know if he's still around. He may not be, but SLNH. He was pretty anxious about getting some news from me, and I kind of blew him off in the beginning of the stream because I wanted to do some other things. Guys, are you still in charge point, Booksy? Yeah. You really think this is going to go anywhere? I'll say this much. It's either about to have a melt up back to like $1 that could then end up building out all the way back up to like $1.20, which is pretty likely. This is a very simple version of this chart. It's basically just in a downward channel right now. So that's likely going to happen. It'll come back up to hit that channel mark, test this top at $1, which is a decent trade. It's not huge. Or it's going to drop down again and hit like 85 cents. But in any case, from a perspective of like iterative moves, this is what I would see predominantly, because this particular setup is kind of doing like the same thing over and over again, like a lot of things. And when you look at it from the big picture, as much as like this might frustrate a lot of you, you're like, man, I'm so sick of this crap. This is the basics of a cat ear anyways. So the basics of a cat ear is that within a cat ear you have another one, right? And then within that cat ear you'll have another one. And it's so on and so forth. And so what I'm seeing right now on ChargePoint is that concept in motion. And I know it's true because the waves themselves are doing that. So like this is the first wave here, and that would be the first ear, the first wave on the ear right there. Come back up, test it. Okay. So that's the first one. And that's how these cat ears work, right? It's like they're just wave breakdowns. So the second one also would be from wherever this bottom is, and we don't know if I drew it perfectly or not. This is just a little doodle. But wherever that bottom is to the next one, right? And then likewise, you're going to see that as the breakdown level here. And then from wherever that one is to the next one, so on and so forth. What you find is that sometimes, not always, is that these accelerate, right? and they're actually driving the price back up at some point to these trajectories because that's where the bulls are trying to go. Other times you don't see that. You will see it occasionally be like they're slumping and they're just going to go down. So you have to be careful because it's not like a one and done type deal. So right now, what I've managed to triangulate as best I can, and it probably was just a quick doodle anyways. This is like a 1, 2, 3. This is like a 1, 2, 3 with a bottom that breaks back out and goes back and retests near the second top. It's the same thing. Roughly the exact same, except that this particular setup might have more than one bottom, which is always a fun thing. So when you're doing the waves, you're really just kind of averaging what you think is the best. And there's a potential second wave here that's kind of, a second angle here that's kind of attractive, and that's this one. So there's two waves there that are a possibility for like where that action might be actually trying to go. Because this is like dip below and these are dip above. So I would probably be more conservative in favor of the bottom one, but that's a longer term target as well. So it doesn't go until like way over here in May. Well, again, May might be a breakout mode for a lot of stocks, so who knows. And this could end up acting more as like a pivot for a bottom. But as it goes, it just keeps kind of doing the same thing over and over again. So the first breakdown is essentially like an LSPY on the, breakdown 0 versus an LSPY on breakdown 2, 3, 4, 5 as it goes. And at this point, I'm not really sure if it's on a whole new iteration or if it's like doing something different or what. All I know is that most time frames it got pretty overcooked, so it's going to probably have another final sellout. If it does have more of like a drop and a pop, I don't necessarily expect it's going to come very far above 103. So I'm kind of thinking about that already in advance, that like, well, really maybe the expectation, if you were to think this is like a 1, 2, 3, is that it's going to try to go again. It's only going to hit like 99 cents. It's going to drop down pretty low, and then it's going to react, and that's going to reset these iterations. So what does that mean? Is it good? Is it bad? I don't know yet. I think it just is what it is. Like, we haven't really seen it yet. If it's starting to list back down, that could be kind of bad on the whole, and that might be where it's kind of going, and I'm not sure, which is starting to look that way. Like, it's starting to list down as opposed to up, which shows a lot more strength. This would be like sellers are kind of winning over majority. So when does it stop? At some point it will, because there's a again, like convergence of ideas here. And at some point, yeah, this is going to make the most sense. If it happens now, it'll be going into February. If it happens later, it'll be in May. So it's kind of a big jump. So I would not be surprised to see this kind of bleeding out until then. Unfortunately, And it is what it is. I don't think this was anybody's like favorite at any point, but that's kind of the way I would see it, just like that. And then if it lays up after the next pop, if it can kind of break out here, then you would expect it to go to the next layer up, which is here, which is this channel. So it's not like massive moves. This is saying like maybe one here and then 113. And then who knows? Either it kind of pops and goes and just rockets, or this starts selling back down, in which case there's no telling. It could be pretty low. I do think it's eventually going to be coming back up, and I've got a couple levels that are in mind. This one, maybe not the best. It's okay. But somewhere around 178 makes sense. So if he comes back, I don't know if he's already here. I didn't check it. Yeah, he has a message. I'm going to do one more. Um, SLNH. That's the one he wanted to look at. I got to it. Just took me a while. Yeah, I can see why. Maybe you look at it and think it may be coming down to finish something, but it's hitting lows. One of the ways you could trade this is just trade off of indicators. That RSI looks like a cat ear to me. 1, 2, the paw, which means that the last move would be like this move, but down. So the suggestion would be that this is like a halfway point potentially. And it does seem that way. This looks like a dollar. I think that's probably the aim, is to take it down to $1. It's usually like one of the common goals for shorts. There. So yeah, I'm not really seeing it as a great buy-in. If a dollar comes up, it doesn't mean it's going to get there. And there's definitely levels that this could react off of, but it's already dropped beneath like the main support and sold off down. So I'm kind of like not sure what the appeal would be in this case. Unless you think it's going to do something like this again. But you see the difference is that this is already like pushed away from it. Here it dipped below it and then reacted. Here it's like dipping above it and reacting. So it looks like it's just ready to sell down. Yeah. So I would imagine that this is going to kind of like create its own little way down. There could be some pops and drops, but I just don't see why you would expect it to stop, you know. Maybe faster than that.
It's time for your afternoon stretch break.
Yeah. I think that they're targeting $1. Not positive it gets there. Maybe there'll be a strong reaction off of $1.50. So that might be a place, if it hits $1.50, that you consider like a quick scalp or something back up to like near 2. That's it. I don't think that the RSI is really giving us much to go off of here. To me, it just looks like a massive trend down. The only other thing I can say is, there is a termination point over here in October. So maybe by that point, if it's not beneath $1, it's strong. I don't know. It's just auto reactions followed by down, auto reactions followed by down, auto reaction. I think it's trying to get it as low as it can. It did have a split, so it's happened before maybe. Yeah, I don't know, man. The only thing I can say is, like, you couldn't really trade this without trying to catch a falling knife unless you were trading like these moments, the second actions. Like this guy right here, you could trade off of. This you could have traded off of right here. But I wouldn't have traded at the bottom when it's like free falling. And now it just looks like it's an up thrust. You're just using it to drive the price down without really affecting the. I mean, look how they haven't even gotten on the daily. We haven't even gotten oversold, but it's come way down. They're just using those up thrusts to keep it afloat. So there's not much to say here. Like, the only trade I could see with some serious strength would be if this came above and like laid up on here or something. Then I'd be like, sure. But I don't feel like that's very likely. I think you're more likely going to see like an up thrust that comes up a little bit to maybe near 2 and then drives the price down again. So on and so forth, like it's been going on. Yeah, see, this trend is also targeting that dollar mark. So I'd imagine that this is likely going to be the future for a while, till like May. I didn't talk about GME today. We're underneath 25, and my concern was if we drop 25, which is this support right here, we're pretty much beneath the top. So we're diving down low now into that liquidity. The 50-50 is pretty far. I think it's all the way down to under 24. So while this setup looked like a possibility, I think this setup's like out the window, to be honest. Now this one, I don't think it's like all bad, so don't hear me wrong. I don't think it's like the end of the world bad, but I would be interested to see if maybe the idea of going to 45 was out the window now, and instead going up to just maybe 32 and doing like a head and shoulder top around 31.30, getting a little gap fill or whatever it is that's up here, and then being done with it and kind of bringing it back down, which is sort of what I had over here anyways. I still think it's going to go up into February to 32, so I'm holding my position, but the this particular possibility of like a shallow S-curve is done, you know. And really, at this point, I wouldn't be surprised if it has some trouble getting over 27 again. I mean, we were talking back here about marking up above this top, but because it's coming down so low, now you got to come back and look at the next zone. And because it left this zone behind, it's not like it couldn't just reverse and go. I mean, sure it could if it, if the market held on enough. But there's a longer trend here that I'm starting to think is going to play into it. And you can see it comes over to like the 18th, the intersection there on that drop. And when you play it down from there, roughly the 18th, when you play it down from there, it actually is a pretty good estimation of where that bottom might be at like 2350. That's roughly where the S curve actually terminates if it goes the full 50-50 length, which isn't what I wanted, but it's what's going on. So that was always a possibility. I had it drawn out down low. That doesn't mean that I think it's going to dump to a new low here. It just means that now you're in a situation where this is driven down. And yeah, basically in order to break out, it's going to have like a double break, one at 25 and then the next at 27. And then it could potentially still rise really quickly. And I think what we're going to see is there will be some kind of a, maybe AMC earnings, but some kind of a catalyst event to like prop it up. Yeah. Otherwise, it's pretty much the same as AMC in this regard because it's coming up to that same level to retest, and then it would be done. And this would be like a weakness at this point. It's already come back below that support that was at 25, so it would push up and then drive the price back down more than likely. What about 45? Oh man, anything's possible. I'm just not really feeling it right now. I'm thinking that what's likely is that that push up leads to a second sell down and probably goes back to pretty much where this started, just underneath at like 2150 or something, just underneath 24. The full unwinding, if you will. From a creek perspective, if this sold off, if it couldn't break back up here and it doesn't make the double move like the boom boom, which is still, I guess, it's still possible. I'm just being pessimistic. If it doesn't make the double move here and it can't get up higher, I think it could still be quite low, you know, before it does take off. So even though that would give it more ammunition for downside, there's a very real possibility that this still has a significant drop if it can. If the goal here is to drop it below 24, which would seem likely, that this is like an up thrust that then drives the price back down through like 24 and takes it lower. I don't think this is very likely here, so I'm going to get rid of that. But I think that you get a reaction up maybe to 30 and then 32. If you get lucky, it might go even farther. But then after that, I think you're likely going to come back down, and we'll see what the waves do. But technically, it could be really wide here. It'd take a long time to come back down. But I think that really, if you look at this big picture, like their creek is really far away. It's way down here, like the beginning of this move almost. I don't necessarily think it's going to go that far, but this thing's aiming for like 10. That seems too far, right? Yeah, it might be. What would be more likely is probably that 17 finally. You know, people were talking about that a long time ago, that 1750. That might be more likely going into April, May. Back down to that takeoff level here at 15 and then break out May, June. So that's GME. I got to go. Spent a lot of time on here. I was only going to do a short stream and then do a run, but 2438, the 200 SMA. Yeah. Well, that 2438, if that's the case, my guess is that could be the bounce level, and then maybe that's the flush level. So if it's like a double flush or something. So however high it needs to go to get back down to 17 through 24, that's like up to 37. That's one of the targets. So it definitely seems possible that this is the aim. Dump, bounce, react. I don't know. Maybe. I think the higher they go here, the more likely it is that we're going to go down far to 17, I think is likely. I was going to try to run 2 miles today, but I don't know if I'm going to have time. Somebody's supposed to be coming by. Dang it. I spent too much time streaming. Oh well. Maybe I'll run tonight. All right, guys. Take it easy. I'll talk to y'all later. I'm going to head out.